Lisa Cook's lawyer blasted President Trump's move to oust her, saying his accusations are based on nothing more than cut-and-paste allegations of mortgage fraud made on social media. He doubled down on arguments he presented last week, saying Trump lacked valid grounds to fire Cook for cause, a key issue in the suit challenging her dismissal. Meanwhile, Jane Street pulled in a record more than $10 billion in net trading revenue in the second quarter, beating out all of Wall Street's biggest banks, with trading revenue from JP Morgan trailing behind by just over $1 billion. Sources telling us here at Bloomberg, Jane Street logged a record $17.3 billion in trading revenue during the first half of this year. And Hawaii's Kilauea volcano resumed erupting yesterday, shooting lava 330 feet into the sky. All of the lava has been contained and hasn't threatened homes or buildings. Kilauea is one of the world's most active volcanoes. This is the 32nd time it has erupted since December. That's your Bloomberg Brief. John.
Hey, Yahara, thank you. More from Yahara in the next hour, in about 30 minutes from now. Up next on the program, undoing diplomacy.
A lot of countries are backing away from their close relationships with the United States. We're going to wake up 5 years from now. We're going to realize that we've just undid 20 years of diplomacy that have sort of pushed back against the China-led world. It's a problem.
We'll get to that problem next on the program. We'll catch up with Joanna Chua of Citi from New York. This is Bloomberg.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Nasseri, and Los Angeles royalty Willow Bay. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azar. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bring you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Buenos Aires, Argentina, and this is Bloomberg.
Equities bouncing back by 0.5% on the S&P 500, driven by gains for Google, for Apple. The Nasdaq 100 up by 0.7. That's the price action in the equity market under surveillance this morning, undoing diplomacy.
A lot of countries are backing away from their close relationships with the United States. We're seeing a situation where China is becoming an attractive option because it's not the United States right now. We're going to wake up 5 years from now. We're going to realize that we've just undid 20 years of diplomacy that have sort of pushed back against a China-led world. It's a problem.
So here's the latest this morning. Chinese President Xi Jinping hosting Russia's Vladimir Putin and North Korea's Kim Jong-un in Beijing for a once-a-decade military parade. Joining us now to discuss is Bloomberg's Min Lo. Min, welcome back to the programme. I'll tell you the message that's coming from America so far this morning. This from the President to Xi. Please give my warmest regards to Putin and Kim Jong-un as you conspire against the United States of America. What's the response from Asia this morning?
Well, President Xi didn't mention America at all in his speech. And I mean, you think about it, President Xi's speech is probably drafted a long time ago. He's unlikely to change it to respond to a tweet from President Trump. But Trump was asking whether China will mention the U.S. at all and its role in aiding China during World War II. And President Xi, in his speech, of course, he thanked the Chinese veterans for their sacrifices, but he also made a nod to foreign countries. Didn't name drop the U.S., though. He mentioned foreign countries' help in helping China secure its freedom and its freedom from World War II. And of course, what's unsaid is the imagery you get out of this, right? Because Kim Jong-un and Putin flanking President Xi, some analysts have called these an excess of upheaval. And it's not just these two countries. You have the leader of Iran, the leader of Myanmar as well, some of the most sanctioned countries present at this gathering of at least 26 leaders who are there. And interesting as well, you look at the guest list. Obviously, US and UK are not present. There are only two European leaders, Serbia and Slovak is there. But then there is all of these Asian leaders as well, many of the Southeast Asian leaders, including Vietnam, Malaysia. President Prabowo, he was supposed to attend the SEO summit over the weekend. He didn't go because of the protests happening in Indonesia, and he caught a last-minute flight to make it for the parade. And it shows you that, yes, China has this influence, especially over the ASEAN countries who continue to rely heavily on China on trade. And they're perhaps a little bit agnostic to the ideological overtones here and the image of that, you know, the strongman leaders standing together on stage on that days above the portrait of Mao Zedong at the Tiananmen Square.
Min, great reporting in the last 24 hours. Appreciate the coverage. Min Lo there of Bloomberg out of Beijing. To extend the conversation, Joanna Chua, the Chief Asia Economist and Head of Emerging Market Economics at Citi, joins us now for more. Joanna, good morning.
Hi, good morning.
Thanks for being here again. It's been about a year, I think,
yes.
So welcome back.
Yes, happy
Let's
to be
talk
here.
about China. We can avoid the politics if we can. We want to know what's happening with that economy. The Treasury Secretary has sat in your seat, that very chair, and talked about China rebalancing, needing China to rebalance. Are you seeing any rebalancing at all?
Well, so far, no. In fact, if you look at the first half GDP growth in China, net exports contributed an even higher share of GDP growth, about 32% versus last year, 30%. But hey, contributing 30% or more than 30% of your growth for the last year and a half for the second largest economy, that's very challenging for the rest of the world. Now, the hope is we've got the 15th five-year plan coming up in October. Maybe there'll be some kind of rumblings about rebalancing, but at the moment, it's still very early days. There seems to be some signs of shift towards supply side reform, anti-involution, trying to cut excess capacity. But, domestic demand still has a lot of challenges.
So just to put a sort of a bow on this, are you seeing anything in any of the Chinese policies that would fight deflation?
Well, there's been obviously a lot of news coming up, with these kind of lithium mining kind of being shut down. Obviously there's been some, it looks like there's some talk about capacity cuts, instructions from companies not to kind of, have a kind of continued price war. So there seems to be symbolically early signs. But again, we have to see first in the data. It's still very early days. I mean, I think the last CPI data came out. There was a little bit of some signs of a bounce in certain items. But again, overall, inflation is still extremely low.
When we look at the optics of this new alliance, or not new, but sort of reiterating the alliance between Vladimir Putin, Kim Jong-un, and Xi Jinping, and then all of the people in attendance, do you see that in some of the export numbers? The exports really are coming from China and going much more so to all of these countries that are now emboldened friends?
Well, I mean, Russia, North Korea is not really the major trading partner. I think the very strong signs we've seen in the last couple of years is really this dramatic increase in China's exports to the global south. And it's been happening over the last couple of years. It's increased a lot to Latin America. It's increased a lot even to Africa and also parts of Asia like ASEAN. Unfortunately, what that's happened is it's not just exports that have diverted to those countries, but China's trade surplus has mostly come from the global south. So there is a question about how long can you keep this going? What is the absorption capacity of the global south to be running very large trade deficits? Like, for example, I think the image of this Shanghai Cooperation Summit and Modi there, I mean, if you look at India and China's economic relationship, India runs a large trade deficit with China. And then it runs a trade surplus with the US. Now, how do we rebalance that relationship economically when strategic kind of geopolitical relationships are always changing is obviously something that's going to be a challenge.
Are any countries pushing back? And not just the countries that you've labelled already, you've named. I wonder if Europe is starting to push back as well. We've had this conversation now for a number of months that this overcapacity has to be eaten by someone. Either it's the Chinese or it's the people they export to.
No, look, Europe has already been pushing back. I mean, we've had already this news of this kind of tariff on EVs, and, we've seen that news. Obviously, US is pushing back the most aggressively. EU is doing it in a more targeted rather than a blanket way because obviously they have a more kind of rules-based mechanism. You do see a lot of kind of even smaller countries kind of filing WTO complaints, but we have to acknowledge the fact that since China is the largest trading partner for most countries, there's a little bit of asymmetric leverage here when it comes to bargaining positions. So it's always going to be a bit of a challenge. And though countries will lodge complaints or do it on a more targeted basis, I think overall there's a limit to what they can do. That's why these trade surpluses that China is running with these countries continue to grow.
As you know, the US has pushed back aggressively against transshipping, trying to get these countries to put their tariffs up. Now, are you seeing any signs of that rebalance at all so far?
No. So actually what's happening now, it's ironic because at the start of the year, everyone thought, Trump was campaigning 60% tariff on China, 10% on everyone else.
Yep.
So we thought, there's going to be a very wide wedge and it will drive production relocation to other countries. Now it's coming out that the tariff differential is not really as wide as people earlier thought. In fact, ironically, India now gets a higher tariff effectively than China. And then this whole transshipment thing, I think there's been some kind of talk about pressure on Mexico. Obviously, Mexico has a lot more closer relationship with the U.S., so there's some talk that they might put a tariff wall on China in their upcoming budget. But for ASEAN, it's very, very complicated. Now, what we're hearing is that it looks like U.S. is pushing ASEAN, particularly there was some news about Thai officials being told that they have to raise their domestic value-added content in their exports to at least 60% in order to avail of their 19% tariff kind of rate. Otherwise, they could get slapped transshipment. And that's going to be a challenge because a lot of countries have very integrated supply chain and some of that foreign content obviously comes from China.
Can we do this more than once a year? Let's do it try for twice a year. Let's make it happen.
Absolutely.
It's good to see you here in New York.
You.
Thanks for being here. Joanna Chua there of Citi. The second hour of Bloomberg Surveillance is just around the corner. In just a moment, we'll catch up with John Bilton of JP Morgan.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Let me break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that three-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and We have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
The bond market is telling you, not just here, but everywhere else, that it's worried about the path that we're on.
We have seen fiscal concerns pretty much across the board.
If inflation's going higher, that means the yields are going higher.
Things will calm down over the course of the next couple of months.
That's really what's important for the U.S. economy, is getting those long-term interest rates to begin to trend lower.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
It's a much calmer second day to September trading. Live from New York City this morning. Good morning to you all. The second hour of Bloomberg Surveillance starts right now with equities bouncing back by 0.5% on the S&P, by 0.8% on the Nasdaq 100. Some antitrust relief for Google, helping out that stock and helping out Apple too. That's the story for equities. In the bond market, things just settled down a touch. 30-year bond yield short of 5%, 497.48, up a single basis point. 10's up too to 428.28, 428.28 rather. That's the bond market situation. As for the week ahead, some economic data for you. Job openings, jolts a little bit later on this morning. Look out for that. Then we get ADP and claims tomorrow. Then it's on to Friday. It's the payrolls report. Just what is the state of the U.S. economy? So let's talk about that. Let's talk about one single name. Macy's raising its outlook. For the U.S. consumer, just how dicey are things right now? Because this stock is up 4.9%.
And we just heard from Kate McShane that the outlooks over at the Goldman Sachs Retailing Conference are much more positive than they were just a couple of months ago. The question is, from where? How much is this just raising the bar a touch after it was lowered dramatically because of the tariffs on April 2nd? When you take a look at what Macy's is talking about, yes, they upgraded their forecasts and they beat expectations, but it still is below where they came out with projections before that April 2nd announcement. So a real question here, have we reset our expectations? Where is the strength coming from? And how much is Macy's just charging a lot of money for the Blue Mercury products and getting a real boost from it?
I think it's a little bit of everything, especially the latter. That stock is now up by close to 9%. I'm allowed to mention a subcomponent of the ISM?
You are allowed. Fine. Go ahead.
Okay. New orders bouncing back. Forward-looking indicator. If you wanted to sprinkle a good news in the last 24 hours, maybe a sign that perhaps this economy is gearing up to bounce back. Do we see that in payrolls on Friday? Absolutely no idea. But that's the story in this equity market of the past month.
If you want to take that component and create a story, there's an issue of confidence and this reinvestment that a lot of people were talking about as a sneaky bull case, as Stuart Kaiser put it, or there's this idea that maybe a lot of companies which pressed the pause button in the wake of the tariffs to try to work through their inventory are now empty and have to reorder and re-up. And how much is that part of the story, which also will give a boost to the economy? Either way, this is a very very complicated moment. And you might see everyone trying to struggle with it as they try to explain why is the bond market selling off? How much does this market have legs? It is because it's at a tipping point for a host of different themes, whether it's the AI theme, whether it's the economy theme, or whether it's a political dysfunction around the world.
Bond market selling off this morning, just a little bit. Yields higher by a couple of basis points across the curve. Coming up this hour, we'll catch up with John Bilton of JP Morgan as the global bond sell-off hits stocks. Libby Cantrell of PIMCO as Fed Chair Jay Powell interviews, or rather the Fed Chair interviews begin, and Bloomberg's Jamie Rush as European bond yields hit multi-year highs. We begin this hour with stocks bouncing back and bonds finding a firmer footing. John Bilton of JP Morgan writing, we see US Treasuries in a range of 450 to 375 and favour a modest overweight to duration. The steepening bias in the US probably persists given concerns over Fed independence. John joins us now for more. John, good morning. Good to see you. The bond market moves have settled down, at least so far this morning, but they were vicious at times in yesterday's session, particularly in places like France and the UK. Anything to be concerned about?
Well, I think there's a couple of things going on here. I mean, first and foremost, remember which month we're in. This is September. It's back to school for the kids. It's back to new issuance for the bond markets. And it's always a big issuance month. I mean, we saw a 50 billion euro set of issuance coming out of Europe, but we had a UK bond issuance in the 10-year note that was actually reasonably well subscribed. We had 40% international involvement there. So this is not a bond market which is not functioning. It's a bond market that's repricing. And what it's repricing to are some of the fiscal risks. We know about some of the political turmoil in France. We know about some of the fiscal concerns in the UK. And this is all contributing to this general feeling of concern and within bond markets generally. Of course, here in the US, question marks around sort of fiscal impact of inflation also having an effect there. And that's pushing the back end of curves up to new highs. Do
you think it's back to school for fiscal authorities? Is this enough to force corrective action in places like the UK, like France?
Well, I think, we now know that we're going to get a budget on the 26th of November in the UK. We know that there are issues in terms of, balancing spending and investment in the UK. So I think there's a number of things going on here. I think first and foremost, we're repricing to realise that the UK does have this persistent inflationary problem because of supply-side constraints, which is a battle for the Bank of England. And secondly, it's a question of how does the UK invest for growth without upsetting the bond market. So I think that there is this fiscal repricing going on. What gives me encouragement, though, despite us being at the highest level of 30-year bond yields in the UK since 1998, what does give me comfort is the market continues to function. I'd also throw something else in there, which is the technicals here. Remember, in Europe, we've seen big changes to things like the Dutch pension demand for European bonds. We're seeing repricing continuing to come through from liability-driven investors in terms of how they structure their investment platforms. So not all of this is about fiscal. Some of it is about market mechanics.
If the best thing you can say about a bond market is it didn't break, then you wonder how positive a person can actually be. I mean, are you actually bullish on long-term bonds? Or are you just trying to say, look, it's not exactly, hands up in the air, flames behind us, the world is burning down, Liz Truss type of moment, even though yields are high. Yeah. Which is it, bullish or just let's ratchet back some of the more crisis speak?
I think it's more the latter. And I mean, look at the quote that John put on the screen for me where we're talking about the continued steepening bias. We continue to expect to see that because we do have inflation uncertainty. In our work this year in our long-term capital market assumptions programme, we've looked at the average level of inflation and we expect it to be kind of close to central bank targets, maybe a touch above. But what we do think is more inflation volatility. Forces like technology, the energy market pulling it down, forces like fiscal overreach in places pushing it up. And so we'll swing back and forth between points where we see a little bit more inflation coming through. Investors are going to demand more term risk premium as a result. If we look at that in return terms, sure, we've got more volatility, but markets are repricing to reflect that. So it's not necessarily a bullish call on bonds, to be clear here, but it's an expectation that we're seeing a functioning market reprice to set the appropriate level of return given the fiscal risks that are out there.
Does it make sense to hear people bullish on risk assets in this type of setting at a time where you could get governments being forced to cut back spending in order to tame some of the long bond jitters that we have seen recently? And there's a sort of valuation concern with bonds offering yields. I mean, at what point is there a contradiction here?
Well, let's look at the facts. I mean, who's pulling back fiscally? I mean, the US have just announced $2.7 trillion, of which 700 roughly is being channeled towards trying to get companies to join them with capex commitments. So I'd actually go the other way. And then look at Germany, of course, 11% of GDP being committed in fiscal spending. Now, Germany does have the fiscal space. So, yes, fiscal's a big deal. So I don't see a reason why we should be thinking about the economy going into reverse. In fact, I'd be more concerned if bond markets were actually seeing curves invert, because that's usually the signal that something bad's going to happen. So the steepening, to me, I just say hold your nerve. There's a lot of good reasons to be sticking with risk assets. Earnings are turning, sure, valuations are toppy, but generally firms are performing and they're delivering cash back to their shareholders.
So it sounds like you're expecting a re-acceleration in the economy. The US and Europe, the rest of the world, or specific regions?
Look, we're generally bullish on the outlook. The data that have come through in the middle part of this year, especially if we look at the soft data, of course, always forward-looking. Expectations have come down. Consumers are kind of not very happy about the world. But the reality is the US economy is moving along in a reasonable way. We expect the hard data perhaps to dip a little bit in the second half, but we do expect a reacceleration next year. There's regulatory easing to come, huge fiscal spending to come, but more importantly, it's CapEx. We see this CapEx story coming through strongly. And then look at Europe. We have significant commitments out of Germany, particularly out of the German corporate base, and we do expect spending to come through. Yes, there's political risks. This is Europe. There's always political risks. 20 countries in a bloc, average election cycle of 4 to 5 years. You're going to get an election every quarter. So we get used to the noise in the background. So there are these risks out there, but the underlying growth in the economy we feel is there, and we feel it's reasonably
If you're
robust.
a US-based investor, though, are you going to allocate towards those political risks in Europe, or just keep the money at home? At the start of the year, there was a thought that maybe the money would go abroad. What about now?
Well, I think we've got to look at a couple of things, because, we can't be bullish on everything. So the one thing that we do see as having some threat to it is the dollar. So if you're looking at the dollar potentially taking it on the chin as, fiscal experiments take place, and dollar weakening some over the quarters and years ahead, which is our core expectation, you're going to get a currency tailwind. Add to that the fact the Fed are likely to be tilting more dovish, basically following the labour market, but also with changes of staff in the FOMC. ECB are pretty much done on taking rates down, and if anything, we've got this fiscal thrust coming through in Europe, so we'd expect euro-dollar to have a fair value of somewhere around 1.25 over the longer run. So you get that currency tailwind. That removes one of the big impediments, I think, for international investors looking at Europe, and that's been the worry that they're going to underperform on the equity side and get hit with the currency. So you take one of those away. And bear in mind, since the Eurozone crisis, we've seen somewhere in the region of 400 billion of outflows from European stocks. We've reversed maybe a tenth of that. So to get back to a fair allocation, we do see some upside to Europe for international investors.
Your bull cases are sounding so bullish. We see some upside, understanding that there is always political dysfunction. It is Europe, after all. I just wonder how much the alternative is just gold. I mean, you talk about the idea of a weakening in dollar. You talk about this question of political dysfunction in Europe. How much do you see ongoing gains for gold, and is that the new reserve currency?
Well, I wouldn't go as far as to say it's the new reserve currency per se. It's probably the one that's the oldest we've got, apart from perhaps blocks of salt or cowrie shells. But the reality is, look, owning gold, it's been on a tear. And of course it's been on a tear because of the uncertainty, because of concern about debasing of fiat currencies. And I think that is a theme that's going to be with us for a while. So, we don't see pullbacks necessarily in gold. I'd watch the technicals and watch for crowding, because, it's a market that can whip around very, very quickly. But generally, when we look at our outlook for gold, we're seeing returns well above inflation over the long run. So we would see it as having a sensible place in a portfolio for a long-term investor.
Amazing move so far this year, more than 30% higher for 2025 for gold, up again this morning by a third of 1%.
Yeah, maybe blocks of salt and cockle shells will be next, because maybe we'll go back to the old thing,
I don't have a block of gold, but I've got a block of salt at home.
Yeah,
in
do
the
you?
kitchen, yeah.
Really?
Himalayan rock salt, just sitting on the side.
You totally do.
Nice
You shave
slab of it.
And you absolutely shave it.
Just sits there looking pretty. You think I cook? Come on, Lisa. John, it's good to see you.
Good to see you.
Thank you, sir. John Bolden at JP Morgan.
Could I just say, what John just said there was they're not going to plan to cut back fiscal. What about those 2 holidays over in France?
Oh, in France.
Yeah, that's going to change everything.
I think he was talking about Germany specifically.
Yeah, but, there's going to be, a contraction in French holidays.
Still negotiating that, aren't we?
Yeah, well, let's see. That could actually change the financial picture.
Could do. You don't want to annoy the French. They protest quite violently. particularly the farmers.
They're going to be picketing in the control
John's
room.
playing nicely.
All right.
Shouldn't joke about these
All right,
things.
sorry.
Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Here's Yahira. Hey, Yahira.
Hi, John. We're seeing shares of Macy's soaring nearly 10% in the pre-market. The retailer raised its annual outlook and reported its best comparable sales growth in 12 quarters. It's the latest sign that consumers are still spending despite concerns about inflation and tariffs. Macy's now expects net sales of as much as $24 billion for the fiscal year, up slightly from its previous guidance. Meanwhile, gold's hitting a new all-time high earlier for a second straight day. Investors are boosting bets on an interest rate cut and using the commodity to seek safety from the sell-off in bonds and equities. Gold continues to be one of the best-performing major commodities, having risen more than a third this year. And sticking with commodities, oil prices are slipping after Reuters reported that OPEC Plus will consider a fresh round of supply increases when the group meets this weekend. Most analysts and traders expected it to stand pat on production for October, pausing a long run of increases. So a surprise there. That's your Bloomberg brief. John?
Yahira, thank you. More from Yahira in about 30 minutes. Up next on the program, President Trump versus Governor Cook.
This really has nothing to do with the Fed. It has much to do with public officials. If you're going to be in charge of the Federal Reserve, damn, you better sure know how to fill out a mortgage application.
A conversation up next with Libby Cantrell of PIMCO, live from New York City this morning. Good morning.
(9월 3일) 수요일 장마감 AI 모닝 브리핑입니다. 간밤 미국 시장은 노동절 연휴를 마치고 돌아왔지만 분위기는 무거웠습니다. 특히 두 가지 큰 이슈가 시장을 흔들었는데요. 첫째는 미국이 TSMC의 중국 공장에 대한 반도체 장비 수출 허가를 전격 철회하며 기술 전쟁의 강도를 높인 점, 그리고 둘째는 미국 제조업 지표가 여전히 위축 국면을 보였지만 세부 항목에서는 또 다른 신호를 보냈다는 점입니다.
네, 전반적으로 위험 회피 심리가 짙게 깔린 하루였습니다. 말씀하신 대로 가장 큰 뉴스는 미국의 대중국 반도체 통제 강화입니다. 미 상무부는 타이완 세미컨덕터 매뉴팩처링 컴퍼니, 즉 TSMC의 중국 난징 공장에 부여했던 검증된 최종 사용자 지위를 철회한다고 발표했습니다.
VU 지위 철회, 이게 구체적으로 어떤 의미를 갖습니까? 시장에 미치는 파장이 클 것 같은데요.
VU는 일종의 수출 프리패스입니다. 이 지위가 있으면은 개별 허가 없이 미국산 장비나 기술을 신속하게 들여올 수 있었죠. 이제 이게 없어졌으니 TSMC는 장비 하나하나를 들여올 때마다 미 상무부의 개별 라이선스를 받아야 합니다. 당연히 절차는 복잡해지고 시간도 오래 걸리겠죠. 이는 난징 공장의 생산 능력 확장이나 기술 업그레이드에 상당한 제약이 될 수밖에 없습니다.
단순히 TSMC 한 기업에 국한된 문제가 아니겠군요.
예, 그렇습니다. 이건 TSMC를 넘어 삼성전자나 SK하이닉스의 중국 공장에도 곧 닥칠 미래입니다. 이들 기업의 유사한 면제 조치도 약 4개월 후면 만료될 예정이거든요. 결국 미국이 중국 내 반도체 생산 자체를 정밀하게 통제하겠다라는 의지를 명확히 한 겁니다. 반도체 공급망 전체의 불확실성이 커지면서 어제 엔비디아 주가가 50일 이동평균선 아래로 떨어지는 등 기술주 전반의 부담으로 작용했습니다.
알겠습니다. 다음으로 경제 지표를 보죠. 미국 제조업 경기가 여전히 좋지 않다는 신호가 나왔는데 해석이 좀 엇갈리는 것 같습니다.
네, 공급관리협회가 발표한 8월 제조업 구매 관리자 지수가 48.7을 기록했습니다. 기준선인 50을 밑돌았으니 여전히 위축 국면이고 시장 예상치였던 49.0보다도 낮았습니다. 벌써 6개월 연속 위축세입니다.
그런데 왜 해석이 엇갈린다는 거죠?
세부 항목을 들여다보면 다른 그림이 보이기 때문입니다. 특히 미래 수요를 가늠하는 신규 주문 지수가 51.4로 급등하며 6개월 만에 확장 국면으로 전환했습니다. 현재 생산은 부진하지만 앞으로 주문이 늘어날 수 있다는 긍정적인 신호인 셈이죠. 반면 지불 가격 지수는 63.7로 여전히 높은 수준을 유지해 인플레이션 압력이 끈적하게 남아있음을 보여줬습니다.
정리하자면 현재 경기는 위축되고 있지만 미래 수요는 살아날 조짐이 보이고 물가 압력은 여전하다. 참 복합적인 상황이네요.
맞습니다. 경기 침체 우려와 연착륙 기대가 공존하는 연준의 통화정책 결정을 더욱 어렵게 만드는 데이터입니다. 시장이 방향성을 잡기 힘들어하는 이유이기도 하고요. 이런 불확실성은 영국의 재정 우려와 맞물리면서 글로벌 채권 금리 상승으로 이어졌습니다. 영국 30년물 국채 금리는 1998년 이후 최고치를 기록하기도 했습니다.
거시 경제 이야기는 이쯤에서 정리하고 개별 기업 소식으로 넘어가 보겠습니다. 식품업계의 공룡기업 두 곳에서 큰 소식이 들려왔습니다. 먼저 크래프트 하인즈가 회사를 둘로 쪼갠다고요?
네, 크래프트 하인즈가 사업 분할을 발표했습니다. 하인즈 케첩, 필라델피아 크림치즈 같은 소스 및 스프레드 중심의 글로벌 테이스트 엘리베이션 회사와 오스카마이어, 크래프트 싱글즈 등 북미 식료품 중심의 북미 그로서리 회사로 나뉩니다. 2015년 합병 이후 부진했던 성장을 타개하기 위한 고육지책으로 보입니다.
이 분할이 왜 중요한가요?
거대 합병의 실패를 사실상 인정하는 셈입니다. 투자자 입장에서는 이제 성장성이 높은 글로벌 사업과 안정적이지만 저성장인 북미 사업 중 하나를 선택할 수 있게 됩니다. 흥미로운 점은 이 합병을 주도했던 워런 버핏이 이번 분할에 대해 실망스럽다고 공개적으로 언급했다는 점입니다.
그런가 하면 경쟁사인 펩시코에는 행동주의 펀드가 등판했군요.
그렇습니다. 행동주의 펀드의 거물인 엘리엇 매니지먼트가 펩시코 지분 40억 달러 어치를 확보하고 주가 부양을 위한 캠페인을 계획 중이라는 보도가 나왔습니다. 이 소식에 펩시코 주가는 장중에 5% 가까이 급등하기도 했습니다. 시장은 엘리엇이 과거부터 꾸준히 제기됐던 스낵 사업부 프리토레이와 음료 사업부의 분사를 요구할 것으로 보고 있습니다. 크래프트 하인즈와 마찬가지로 거대 기업을 쪼개서 가치를 재평가받으려는 시도가 식품업계 전반의 화두가 되고 있는 셈입니다.
AI 업계 소식도 짚어보죠. 한쪽에선 막대한 자금이 몰리는데 다른 한쪽에선 주가가 흔들리는 모습입니다.
네, 오픈 AI의 강력한 경쟁자로 꼽히는 엔스로픽이 130억 달러 규모의 신규 투자를 유치하면서 기업 가치를 1830억 달러로 평가받았습니다. 비상장 시장에서는 AI에 대한 기대감이 여전히 뜨겁다는 증거입니다. 하지만 상장 시장의 대장주인 엔비디아는 최근 4일 연속 하락하며 3,400억 달러의 시가총액이 증발했습니다. 앞서 말씀드린 미중 기술 갈등과 고평가 부담이 작용한 것으로 보입니다.
장마감 후 실적을 발표한 기업이 있었죠?
네, 클라우드 보안업체 지스케일러가 시장 예상을 뛰어넘는 호실적을 발표했습니다. 4분기 조정 주당 순이익 IPS는 0.89달러로 예상치 0.80달러를 웃돌았고 매출 역시 7억 1,900만 달러로 예상치 7억 700만 달러를 상회했습니다. 연간 수익 전망치까지 상향 조정했고요.
불확실한 경제 상황 속에서도 사이버 보안 분야의 성장은 견조하군요.
맞습니다. 기업들이 디지털 전환을 가속화하면서 보안 투자는 이제 선택이 아닌 필수가 됐습니다. 지스케일러의 호실적은 경기 둔화 우려 속에서도 사이버 보안 시장에 강력한 수요가 계속되고 있음을 보여주는 좋은 사례입니다.
자, 그럼 오늘 시장을 총정리해 주시죠. 핵심 포인트는 무엇이었고 앞으로 무엇을 주목해야 할까요?
오늘의 핵심은 불확실성의 심화입니다. 첫째, 미국의 TSMC 제재에서 보듯 미중 기술 패권 경쟁이 격화되며 반도체 섹터의 지정학적 리스크가 커졌습니다. 둘째, 미국 제조업 지표처럼 경제 데이터가 엇갈린 신호를 보내면서 연준의 정책 경로도 한 치 앞을 내다보기 어려워졌습니다. 시장은 위험 자산 비중을 줄이며 관망세로 돌아선 모습입니다.
다음 관전 포인트는 역시 고용 지표가 되겠군요.
네, 현지 시간으로 금요일에 발표될 8월 비농업 고용 보고서가 단기적인 시장 방향을 결정할 가장 중요한 변수입니다. 이 데이터에 따라 9월 금리 인하에 대한 기대가 크게 흔들릴 수 있기 때문에 발표 전까지는 변동성 높은 장세가 이어질 가능성이 큽니다.
오늘 방송을 마무리하기 전에 청취자 여러분께 질문 하나 드리고 싶네요. 크래프트 하인즈는 분할을 선택했고 펩시코는 분할 압박을 받고 있습니다. 만약 여러분이 거대 복합 기업의 최고 경영자라면 지금 같은 불확실성의 시대에 회사를 쪼개 전문성을 강화하시겠습니까? 아니면 규모의 경제를 유지하며 안정을 택하시겠습니까?
성장과 안정 사이 어려운 선택이 될 것 같습니다.
장마감 AI 모닝 브리핑 오늘 순서는 여기까지입니다. 저희는 내일 다시 시장의 가장 중요한 소식들과 함께 돌아오겠습니다.
내일 뵙겠습니다.
9월 3...
근데 여기서 어제 있었던 시장의 중요 포인트 살펴보았고요. 자, 금일 중요 일정 및 기사 살펴보도록 하겠습니다. 자, 22분 전 8시 자, NBA 모기지 신청지수 발표가 되었고요. 그리고 10시 연준의 무살렘 총재 연설이 예정되어 있습니다. 자, 그 11시 7월 졸트 구인 인원 발표가 되고요. 11시 7월 제조업 수주가 발표됩니다. 자, 그리고 새벽 2시 30분 연준의 카시카리 총재 연설이 예정되어 있고요. 3시 연준의 베이지북이 있습니다. 자, 금일 백악관 일정으로는 12시 트럼프 대통령 이제 폴란드 대통령과의 양자회담 예정되어 있습니다. 자, 금일 개장 전 중요 뉴스 한번 살펴보도록 하겠습니다.
The issue we've been talking about in the last 24 hours is very much close to home for you. It's in the bond market. For the team over at PIMCO. What's been amazing for Lisa, me and others on this program is to see tariffs go from something that was bond negative in April to bond positive as we kick off September. How are you and the team thinking about that now?
Yeah, well, and I think actually in all of these things that we just were talking about too, I mean, from our perspective, really lead to what we've seen in the bond market, which is a curve steepening kind of bias. And that is something that we've had. We've been positioned for that really since the beginning of this year. Clearly, there might be even more room to run on this in terms of the concerns around Fed independence, the concerns around inflation, the concerns about a government shutdown.
자, 로이터발 기사이고요. 자, 프라이스 워터하우스 쿠퍼스 이제 미국 연말 소비 급감 전망이라고 시사한 바가 있네요. 자, PwC 프라이스 워터하우스 쿠퍼스의 조사에 따르면 2025년 미국 연말 소비는 팬데믹 이후 가장 큰 폭으로 감소할 것으로 전망이 된다고 밝혔고요. 자, 미국 소비자들은 1인당 평균 1,552달러의 지출을 할 계획이며 이는 작년 대비 5.3% 감소한 수치라고 합니다. 자, 2020년 7.6% 감소 이후 가장 큰 폭의 하락이 예상된다고 하네요. 자, 감소의 이유로는 이제 지속되는 인플레이션과 경제적 불확실성 등등이 있으며 이로 인해서 소비자들이 지갑을 닫고 있다고 하네요. 특히 의류, 고가의 고가품들, 외식 등 비필수적인 지출을 줄이겠다는 경향이 뚜렷하다고 합니다. 자, 이번 소비 감소는 Z세대가 주도하고 있고요. 2014년 37%의 소비 증가를 이끌었던 Z세대가 올해는 정반대로 예산을 23% 삭감할 것으로 예상하고 있습니다. 자, 그리고 연준 관련된 기사 하나가 확인이 되고 있습니다. 자, 트럼프 대통령이 이제 연준의 리사 쿡 이사에게 그 모기지 문제로 해임을 요청한 거에 대해서 해임이 불가하다는 뉴스가 나왔고요. 자, 쿡 이사가 이제 트럼프 대통령의 해임 시도에 대해 해임 사유로 제시된 정보는 2022년 상원 인준 과정에서 이미 제출 및 검토된 내용이므로 해임의 근거가 될 수 없다고 반박했습니다. 자, 쿡 이사 측은 인준 당시 문제가 없었다면 지금 와서 이를 정당한 사유로 삼는 것은 부당하다고 주장을 하고 있고요. 또한 서류별 거주지 표시 그 서류별 거주자 표시가 달랐던 점은 사실이나 이는 인준 과정에서 상원과 백악관이 충분히 질의할 수 있었음에도 문제 삼지 않았다고 지적했습니다. 자, 쿡 이사는 법원에 긴급 가처분을 신청하며 해임 요력 정지를 요구했으면 법원은 정부에 목요일까지 추가 의견 제출을 요구했습니다. 자, 이에 따라 이번 주 내 결정은 어려울 것으로 전망이 되고 있고요. 추가적으로 쿠기사가 이번 해임 시도가 금리 인하에 소극적인 연준에 대한 트럼프 대통령의 불만에서 비롯된 정치적 공격이다. 사기 혐의는 이를 위한 명분에 불과하다고 일축하는 바가 있습니다. 자, 그리고 금 관련, 골드 관련 해서 기사 나온 부분 확인하고 다음 기사 확인해 보도록 하겠습니다. 자, 골드 가격의 미국 금리 인하 기대감으로 신고가를 돌파했다고 합니다. 자, 국제 금값이 온스당 3,546.96달러를 기록하면 사상 최고치를 경신했습니다. 자, 최근 7일 거래일 동안 약 5% 상승한 걸로 확인이 되고 있고요. 파월 의장이 금리 인하 가능성을 시사하면서 이자가 없는 금의 투자의 매력이 커졌으며 주식 및 채권 시장의 불안으로 안전자산 선호 심리가 극대화됐다고 합니다.
On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Stocks doing okay, positive by 0.4% on the S&P 500. Similar move elsewhere on the Nasdaq, higher by 0.64, thanks to the movement of two names, Apple and Google, which we'll get to a little bit later in a few moments' time. In the bond market, 2-year, 10-year, 30-year, just want to sit on this within 1 basis point of 5% twice in the last 24 hours. The 30-year yield coming back down to about 4.96, 96, but hitting a bit of a ceiling on that front. This line in the sand, 5%. Still there. Yields higher by a single basis point this morning on 30s, on 10s up by a little more than 1 to 427.70. Things calming down, at least so far this morning.
You're right to point out that it's hit or just been below that 5% threshold several times in the past 24 hours, because a lot of people have pointed to technical aspects of this. That was the fear yesterday, that we were superseding some technical levels. Today, not so much, which is giving people faith that maybe we've kind of blown the top off in terms of the freak out, the sort of toxic brew of concerns that have been ongoing for quite a while. Maybe it's just settling.
네, 이어서 진행하도록 하겠습니다. 자, 파월 의장이 금리 인하 가능성을 시사하면서 이자가 없는 금의 투자에 매력이 커졌으며 주식 및 채권 시장의 불안으로 안전자산 선호 심리가 극대화됐다고 확인이 되고 있고요. 자, 또한 트럼프 대통령의 연준 이사의 해임 시도 등으로 미국 중앙은행이 독립성에 대한 우려가 커진 점도 금값 상승에 부채질한 것으로 확인이 되고 있습니다. 자, 실버, 은은 올해 들어 40% 이상 급등하며 금보다 높은 상승률을 기록했고요. 특히 태양광 패널 등 산업용 수요가 높아 5년 연속 공급 부족 상태에 있습니다. 자, 그리고 다음 기사 살펴보도록 하겠습니다. 자, 글로벌 채권 매도세 심화, 장기채 최대 타격 이라는 내용의 기사이고요. 출처는 블룸버그발 기사입니다. 자, 전세계 국채 시장에서 장기 국채를 중심으로 한 투매 현상이 심화되고 있다고 확인이 되고 있는데요. 각국 정부의 재정 건정성에 대한 우려로 전통적인 안전자산이던 국채에 대한 투자 심리가 급격히 약화가 되고 있다고 확인이 되고 있습니다. 자, 미국 30년 국채금리는 5% 근접, 영국 30년물은 5.75%, 1998년 이후 최고치고요. 일본 20년물은 금세기 최고치를 기록한 바가 있습니다. 자, 이 부분도 미국의 연준의 독립성이 흔들리고 있다는 점도 시장의 불안을 가중시키는 요인 중 하나라고 확인이 되고 있고요. 자, 이에 노무라는 재정적 부채 문제는 단기간에 해소되기 어렵다고 보며 장단기 금리차가 확대되는 수익률 곡선이 가파라짐이 뉴노멀일 것이라고 분석한 바가 있습니다. 자, 그리고 두 가지 기사도 살펴보고 트레이딩 일정 이어나가도록 하겠습니다. 자, 페더레이티드 헤르메스의 스티브 키아바로네는 최근 증시 약세가 장기적인 상승 추세를 꺾지 못할 것이라고 전했습니다. 자, 그는 견조한 기업 실적과 경제지표, 향후 금리 인하 기대감을 이유로 들며 4개월간의 랠리 이후 나타난 건강한 거품 제거 과정이라고 평가했고요. 따라서 오히려 지금과 같이 약세장에서는 비중을 늘려야 한다고 조언한 바가 있습니다. 자, 이러한 긍정론은 모건 스탠리와 에버코어, ISI 등 다른 주요 투자기관에서도 나오고 있습니다. 자, 그리고 헤지펀드 2개월 연속 순매도라는 기사이고요. 자, 골드만삭스 프라임 트레이딩 데스크에 따르면 헤지펀드는 8월 한 달간 전 세계 주식시장에서 2개월 연속 순매도를 기록했습니다. 자, 특히 헬스케어, 그리고 필수 소비재, 금융, 부동산 섹터를 중심으로 매도세가 강했으며 미국 상장 ETF 대항 공매도 역시 2.1% 증가한 걸로 확인이 되고 있다고 합니다. 자, 금일 개장 전 확인되는 뉴스는 여기까지이고요. 개인, 기업별 뉴스는 올려드리는 링크 참고하셔서 개인 기업별 뉴스 참고하시길 바라겠습니다. 자, 시장 상황 분석 후 21시부터 트레이딩이 이어나가도록 하겠습니다. 자, 21시부터 나스닥 정규 트레이딩 일정 이어나가도록 하겠습니다.
Relationships getting solidified versus just simply optics, and that has been the big question in a lot of what's happened over the past 24 hours.
That's the latest on trade. Here's the latest on the Federal Reserve. So we're learning the Treasury Secretary Scott Bessent will begin interviewing replacements for Fed Chair Jay Powell this coming Friday. The Wall Street Journal reporting there are 11 contenders. Following the interviews, Bessent will present a final list to the president to have a look through.
Key question, what does the Fed look like post-Powell? And increasingly, a lot of people looking to a change in the reaction function. And I was talking about this earlier, that the team over at Morgan Stanley said after Jackson Hole, they changed their view for rate cuts because clearly the reaction function at the Federal Reserve has changed. They are going to opt for protecting growth and protecting the economy at the risk of faster inflation down the line. Seems to be what they're talking about this morning as well.
Is that what the replacement's going to do too?
Well, that's exactly
Next
it,
year.
right? I mean, is that what we're looking for, given the fact that that seems to be the tone coming from this administration?
Let's get to the bond market. This conversation has big implications for what's happening worldwide. European bond yields hitting multi-decade highs in the last few days. In France, the highest going back to the Eurozone debt crisis back in 2011. In the UK, the highest since 1998. And over in Japan, the highest on record. Joining us now to discuss is Bloomberg's Jamie Rush. Jamie, welcome to the programme, sir. Let's focus on Europe and the recent developments. Lisa and I have been talking about this for a while, whether these moves will force corrective action in France, in the UK. What are you and the team focused on?
Well, I think first we need to recognise, right, that this is there's a very big global component to what's going on with bond yields globally, especially at the long end. But you are, of course, right that Japan, that France, that the UK are at the epicentre of this. I guess one thing I'd point out if we're thinking about how worried we should be about this is that because it's so concentrated at the long end and because we only issue, say, about 10% of our debt at around that horizon, it's not going to have an immediate fiscal consequence. So the imperative to start to respond to this isn't really going to be there. There isn't a really sharp market incentive at this precise moment, precisely because it's concentrated at the very long end of the curve. So I'd be thinking more about the longer term outlook for rates at horizons more like 10-year. And still, you know, there's cause for concern, there's corrective action which needs to happen. But fundamentally, I mean, for some countries like France, there's nothing that can be done until the political situation is settled. And that's not going to be settled now. The fractious nature of the politics means that it may not be settled for quite some time.
There's a distinction to make, Jamie, as you point out, with the UK, because they have a majority in Parliament. They have the ability to do something. Do they have the willingness? And now we understand we've all got to wait until the end of November for the budget, Jamie. What do you suppose that budget is going to look like?
John, I'd be happy to wait even longer than November if that's what it took to get the UK back in shape. What should we be expecting? Well, look, let's think about what the big picture here is. If you think about what should the tax ratio look like in an economy? Well, it should look something a little bit like the old age dependency ratio. As your population ages, you've got to finance it somehow, you've got to finance the outlays. And if you look at a plot of dependency against tax ratios, you'll see there's a bit of room for the UK to keep moving higher with the tax rate. So ultimately, that, as you said earlier, is likely to be the way out. It's very difficult to secure a political mandate to achieve spending cuts. That's true in France, it's true in the UK. And so it points you in one direction. It's probably going to be tax rises.
Jamie, I know that the UK is in a different position than the rest of Europe, but can you lump together Europe and say that they're in a better situation than the US or a worse situation than the United States fiscally?
I mean, in aggregate, I would say Europe is not looking too bad relative to the US. I mean, if you think about the size of the budget deficit, the difficulty in the political constraints in shrinking it in the US, I don't think Europe looks particularly bad on the whole. But of course, Europe is not a whole, is it? It's not a fiscal union. Germany looks solid. France, on the other hand, does not. And so we're going to see these pockets of risk intensifying until there's political clarity. And our view at Bloomberg Economics is that the fractured nature of the politics just means that that's not going to come into view anytime soon. So we're going to be looking at stopgap solutions, budget stopgaps over the coming year perhaps, that get us a budget or get us some spending continuing, but it's not going to be a resolution, it's not going to be a comprehensive fiscal plan by a long shot.
The reason why I ask that, Jamie, is because a lot of people had talked about how the United States and some of the concerns here were driving some of the dysfunction in the rest of the world. And as John pointed out earlier, actually, we're seeing the market protest dysfunction in places like Europe, in places like Japan. almost more than what we're seeing in the United States, where there's the offset of revenues, whether it's from tariffs or whether it's from faster growth. Do you think that's a fair way to look at it?
Yeah, I mean, I think I can see it that way. And if you want to think of another factor, well, the US isn't going to have to ramp up defense spending in the same way that Europe is going to have to. So if you want another dividing line, then that's another one which kind of pushes you towards the US. But I don't think you can underestimate the degree of division across the House and the lack of political will in the US to tackle the budget deficit, irrespective of where we are now in the current regime or where we may be in 5 or 10 years' time. It's very hard to see that changing.
Jamie, appreciate your time. I have a feeling we'll be talking again soon. Jamie Rush there of Bloomberg out of London on the situation in Europe. You've got to wait a few months to get that statement from the Chancellor in the UK.
He said he'd love to wait if that really meant something that would actually turn things around.
I agree.
I think a lot of people would agree. The question is, will they actually engage with some of those spending cuts? And I do think it's notable that pretty much everyone in bond markets are saying, you got to do it. And they're saying, maybe we could just raise taxes a little bit right here.
The good news for this morning, at least, is yields are lower by 3 basis points or so. 30-year bond yields in the UK, 5.66. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Back with us, here's Yahara. Hey, Yahara.
Hi, John. President Donald Trump is calling out China's President Xi. Trump took to social media, posting, "Please give my warmest regards to Vladimir Putin and Kim Jong-un as you conspire against the United States of America." This comes as Xi hosted Russia's Vladimir Putin and North Korea's Kim Jong-un, as you can see there, for China's largest military parade. Meanwhile, Meta has poached more AI talent from Apple. The iPhone maker's lead AI researcher left to join the Meta robotics studio. And sources telling us here at Bloomberg, 3 more AI researchers are leaving Apple's large language models team. As we reported before, Apple is exploring whether to rely more on outside technology rather than homegrown models. And sticking with tech, Anthropic has closed a deal to raise $13 billion. This new round of funding nearly triples its valuation to $183 billion, making the AI company one of the most valuable startups in the world. Anthropic will use the new funding to meet growing enterprise demand for their safety research and accelerate plans for international expansion. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the programme, the bond sell-off continues.
You have these policies that really are incompatible with lower inflation and with lower yields, and that I think is driving the market in the long end pretty much around the world.
A conversation up next with Greg Peters of PGIM, live from New York City. This is Bloomberg.
In my opinion, at least, the reason that the U.S. is so creative and innovative and has so much interesting development and has, most of the largest trillion-dollar businesses is because we have the best capital markets. And capital market development is really what creates the funding in order to pursue ideas. So in America, any idea you have, there's a market for it. Right? So building markets like the securitization markets in the U.S. Really allowed for non-financial companies to get into the financial industry business. And that was really a derivative of making the securitization market so competitive. So building securitization markets and continuing to grow markets and figuring out how to continuously fund ideas, I think that's going to be the next stage of growth for these markets.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you the latest in tech and AI news whenever and wherever it happens.
자, 트레이딩 전 놓친 기사 하나 있어가지고 이 부분까지 말씀드리고 진입 대기하도록 하겠습니다. 자, 연준 관련 기사이고요. 자, 베센트 재무장관이 금요일부터 연준 의장 후보 면접을 시작했다고 합니다. 자, 베센트 재무장관이 파월 의장의 후임자를 찾기 위해 이번 주 금요일부터 11명의 후보를 대상으로 면접을 시작한다고 합니다. 자, 거론되는 후보 중에는 이제 크리스토퍼 월러 이사, 미셸 보우먼 이사 등이 포함되어 있다고 확인이 되고 있고요. 추가적으로 나오는 후보 및 연준 관련 속보는 말씀드리도록 하겠습니다. 자, 잠시 후
So here's the latest this morning. The
10분 뒤
30-year bond yield coming within
21시부터
just 1
트레이딩
basis point of
진행하도록
5%
하겠습니다.
earlier in the session. Greg Pitt is a Peach in fixed income, writing markets are torn between the support from lower US front-end yields and the risk premium associated with unconventional policy. Greg joins us now for more. Greg, welcome to the program, sir. Just to extend that quote, what do you think is the greater force at the moment?
I think it's the uncertainty. I think the term risk premium is the driver, and that manifests in many different ways. I've heard a lot of commentary throughout the morning, and it is a global sell-off, and there's different reasons behind what's happening in the UK versus the US. But ultimately, I think there is this risk premium function that's being priced in that's overwhelming what central bank policy is endeavoring to do.
Greg, as you know, over the last month or so, we've seen steepeners both in Europe and in the US. The steepener in the US has been more of a bull steepener led by the front end. In France and the UK, it's been more of a bear steepener led by the long end. Do you see reason for the long end in the United States to begin to participate in the same way we've seen elsewhere?
I do. I mean, the U.S. has been an outperformer in the back end. So we're talking about hitting 5%. But if you look at kind of throughout Europe, the curve steepened much more and is currently much steeper. So I think there's scope for the U.S. to catch up. I think the U.S. has outperformed for a few reasons. First and foremost is the tariffs, right? So, the bond markets are pricing in that revenue, at least a portion of it. It's unclear, one, if those tariffs will stay in place and what happens to that revenue. So it was more of a hedge. And the other is around kind of this notion or this belief that the Treasury will operate some kind of twist function, where you look at the UK and in Japan, they've just really hit the back end of the curve hard from a supply standpoint. Bond investors are a little concerned about putting on too much of a steepener trade, given the fact that you might see some change in the supply.
So, Greg, this is an issue of betting that the United States Treasury Department is not going to sell 30-year bonds nearly as much as T-bills, which we know is currently part of the plan. How much is this also counting on unconventional Fed policies and some Operation Twist as executed by the balance sheet in some fashion?
No, I think it's all related, honestly. But, let's be clear, Lisa, it is unclear. So we don't know. So we're just hedging our bets, as with everything. Uncertainty continues to rule the day. Kind of the range of volatility on the bond side, at least, has consolidated much less than where we were a year ago, 2 years ago, 6 months ago. So we are, consolidating. But at the end of the day, we just don't know, right? We don't know what the fiscal looks like, and I think that's important. And so the bond market's kind of playing that game. And we also don't know what Treasury intends to do with the forward issuance calendar.
So if I put this together into some sort of trade, Greg, are you buying European long bonds and selling the ones in the U.S.?
Yeah, so I think Europe looks attractive, right? If you look at it just on a kind of a fundamental basis, just forget the supply dynamics for a moment. The UK, there's been lots of chatter around the UK, of course, the past couple of days. But the UK actually does have a better fiscal position than the US, right? Just on the debt to GDP basis, and yields are substantially higher, right? And then if you look at it on a forward basis, US versus Europe, and I know Europe is a conglomerate of, different kind of fiscal situations, but if you look at Europe, there's, some fiscal decline potentially, but maybe not as much as the US. So, yeah, I actually see more opportunities outside the U.S. from a bond market perspective than I do within the U.S.
Greg, are we comparing apples to apples here, though? Aren't the fiscal concerns in the UK more relevant to the UK market than fiscal concerns in America are
자, 1차
to the US
진입
market?
비율
We've often talked about
얘기해보도록
this, the unique
하겠습니다.
privilege America has of borrowing in the debt markets. Is it a relevant source of risk?
Well, I think that'll be tested over time. But if you look at it just on a pure basis from that
자, 현
lens,
시간대 거래량이 많지 않아
the US is benefiting,
진입 후
right? If you look at it
청산까지
just,
시간이
debt to
소요될 수 있는
GDP
점
scatter
참고
versus yields or
부탁드리겠습니다.
curve slope,
자, 잠시
the
후
US is sticking out in a positive
1차
way.
진입
So I think the
사인
question
드리도록
on the
하겠습니다.
table is, will that remain? And I'm less sure about that, quite candidly. Not suggesting it's going to lose all of its privilege, but maybe some of it. And I think that'll be tested. That narrative will continue to be tested over the course of the next month, 2 months, 2 years.
Greg, just before you go, you mentioned favouring UK debt, maybe European debt more broadly. Are there pockets along the curve that you're more constructive on, and other pockets that you would be hands off, you'd leave alone?
No, I mean, the long end's interesting. That's where the market has really sold off, and it's sold off for good reason. So I don't want to suggest that it's just a wave it in type of trade, but that's where the dislocation is, and I see more scope in kind of the intermediate to back end of the curves than I do the front end. Where in the U.S. it's opposite, where I see more opportunities in the kind of the belly and inward. So it's kind of a very different trade outside the U.S. versus inside the U.S.
Interesting. Greg, well framed. Interesting to hear your opinion. Thank you, sir. Greg Peters there of PGIM, fixed income on the latest in this bond market. The way that conversation started, I think has been really underplayed, not just recently, but through much of this year. Just how much outperformance we've actually seen in the US debt
자,
market.
진입권 길게 보고 대응 이어나가도록 하겠습니다.
Looking at the yield curve between whether it's 10s and 30s or 2s and 10s, and yeah, it's
자,
wide.
매도 진입 사인 되도록 하겠습니다. 자, 매도 5개
체결되었습니다.
진입 사인
확인
드립니다.
바랍니다. 주문 청산이 완료되었습니다. 체결되었습니다.
자, 진입가
확인 바랍니다.
429.50입니다. 429.50 매도 진입 사인 드렸습니다.
It does seem like the U.S. is subject to some of the same concerns overseas. So why has there been such an outperformance? The idea that Greg was saying maybe it's because of the tariff revenues really highlights how much there is uncertainty about the fiscal picture of the United States.
We're talking about real money.
자, 실시간 대응 천천히 이어나가 보도록 하겠습니다. 자, 현재 시간대 거래량이 부족하므로 긴 대응이 이루어질 수 있는 점 참고 부탁드리겠습니다. 자, 매도 5개 진입가 429.50 실시간 대응 중에 있습니다.
Coming up on the program, we'll talk about that uncertainty with Jitanya Kandari of Morgan Stanley. We'll catch up with Stefan Slavinsky of BNP Paribas, Nancy Lazar of Piper Sandler, and Mark Cabana of Bank of America. The third hour of Bloomberg Surveillance up next.
Do you know what to tell people about what the tariffs are going to do on the United States economy and the investment environment, or is it not clear yet?
If you look at the impact of the tariffs, they were much more significant and broad than I think the market expected. Looks closer to 19% on balance versus 2 and change last year. So effectively, it's a 20% increase on 10% of household goods that are imported into this country.
And do you think it's going to lead to a recession?
Well, we think that it's going to impact both inflation and the economic growth scenario. So we were coming into yesterday expecting the real economy to grow at 2%. And inflation to be closer to 2.8%. If you just go through the math, it would suggest there's probably 1 to 2 points upward increase on inflation and a similar amount on economic growth. So it could put us in a position where we're teetering.
So the tariffs will likely depress the GDP growth rate and increase inflation. So what's the advantage of tariffs?
From our standpoint, we have a hard time seeing the benefits of tariffs. They do tend to be inflationary in the short term. As you're pointing out, the longer term impact on economies is probably the greater downside.
Asia is at the forefront of some of the world's biggest stories.
자, 여기서 현재 진입권 끊어가도록 하겠습니다. 자, 수익 청산 사인드립니다. 자, 수익 청산하도록 하겠습니다. 수익 청산 사인드립니다.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade.
주문 청산이 완료되었습니다.
수익 청산 사인드립니다.
Changes everything.
자, 이어서 바로 2차 진입뷰 대기하도록 하겠습니다. 2차 진입뷰 대기하도록 하겠습니다.
In China. I think we said there's something like 50 or 60 robotic startups in China. Are we behind? And should we be concerned about that?
I think as far as the state of innovation, no. Most
자,
of those
추가
robots
압력
aren't built for
나올
work
수 있다고
for the
판단되고
things
있고요.
that,
여기서
which is the entry point for
이번 캔들
these
확인 후에
robots
진입
today.
사인 드리도록 하겠습니다.
They can do some interesting things. A lot of times it's backflips or making coffee or something, but not really useful work. These robots can pick up to 50 pounds on our next generation. So they're great for the education of robotics, getting people interested. But as far
자, 매도 진입 사인 드리겠습니다. 자, 매도 진입 사인 드립니다. 진입가 412.00입니다. 412.00 매도 진입 사인 드립니다.
Much of out of the Chinese robots.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg. Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacroix in Sintra, Portugal, and this is Bloomberg.
There's a lot of negativity hiding out in pockets of the market that have not performed.
The outlook for the equity market from here is not really that robust.
You're really seeing this pivot and rotation.
You got to follow the tech stocks. If they go down, the market's going to go down.
For most investors, they're really levered to what's happening at the Fed.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning, this is Bloomberg Surveillance. Good morning, good morning. The third hour of Bloomberg Surveillance starts right now, and your scores look like this. Equities on the S&P 500, positive by 0.4%, bouncing back, supported by Google and Apple. The Nasdaq 100 higher by 0.65 in the bond market, within 1 basis point of 5% at the long end of the curve in the last 24 hours. This morning, 495.93, and yields just a touch lower. Unchanged on 10s, 426.92, and lots of data still to come. Later on this morning, job openings, the drumbeat continues. ADP data tomorrow, together with jobless claims, and then payrolls this Friday.
Key question is, how bad does the data have to be to reintroduce the idea of a 50 basis point rate cut this month? And you might laugh and say, really, we're talking about that again? I thought we took that off the table. And yet Stephen Englander, actually, over at Standard Chartered, put out a piece overnight where he said, actually, if the non-farm payrolls report comes in with a headline number of 40,000, or if revisions come in really problematically, they could see a reason to cut by 50 basis points. And suddenly, you might see a huge rally in the global bond markets, and we could reverse this whole conversation.
Well, I can tell you the median estimate's 75, the low is 0, the new high is 144. So that's a pretty wide spread. going into Friday.
And you could make that spread even wider when you start to talk about revisions and how accurate any of this data actually is and how much the market is going to look at that, which is a reason why we're all very excited about ADP and JOLTS today. Don't forget JOLTS. I'm very curious about job openings and the quits rate, which might tell us more, as well as the ISM subcomponents from yesterday.
So that's for July, and as we understand in July, things weren't tremendous based on non-farm payrolls. Much more interested in the data still to come and a forward look at things, because this market is pricing in a big snapback, a recovery, an acceleration in growth, reflected in and by what we saw in the equity market just last month. Home builders doing nicely, airlines doing nicely, small caps running aggressively. That's got to be supported by a rebound in the actual economic data. Let's see if we get it.
I have an economic data point for you.
What have you got?
The Beige Book. That is coming out later today, and I can tell you I am very interested to see the Beige Book because it might give some commentary about how much companies are actually re-upping some of those investment plans. Although, of course, it can all be dated considering the court case and what that could actually do. But that is the key question. How much do you see a reacceleration in investment beyond just the artificial intelligence giants that have powered a lot of the index higher, even if we do get some questions around the underlying economy?
The good news is Chairman Powell's not going to wait. He already looks spooked. It looks like he's going to prioritise a little bit of front-loading, a rate cut in September, regardless of what the data looks like between now and then, and potentially beyond.
And this is the reason why I think the bond market sell-off has spooked a lot of people. And you could say it's a global story, and you could say it's a real question of fiscal authorities kind of facing a lot of dysfunction. But there is a bias to allow inflation to run hotter. When you have Japan and their core CPI coming in above where the United States is for the first time in 40 years, you are talking about a new inflationary regime globally. And if the Fed's going to tolerate that, they're not necessarily going to see that as a priority in terms of the concern. That introduces a new risk. Of course, inflation necessarily is a concern that's coming out, but this is what a lot of people are saying.
I hear you, Lisa. I'm totally there with you. I don't think anyone on the committee can look at you with a straight face and say they're targeting 2%.
I think that that's correct.
Because if they think they are, they've failed. They've clearly prioritised the labour market. We saw that last year when they cut 100 basis points, and arguably we're seeing it again going into the September meeting.
If you look at break-even rates, people are saying 2%. The new 2% is something like 2.4%. And if you're targeting 2%, you say, I'll be okay with getting down to 2% in 2035 as long as we maintain unemployment rates at this level. That's a very different type of 2% target than during a period of time where it was getting inflation up to 2%, not down to 2%.
You know what the schedule looks like. Payrolls this Friday, then 6 days later on the 11th we'll get CPI, then the following week that Federal Reserve decision. Coming up this hour, over the next 60 minutes we'll catch up with Jitanya Kandari of Morgan Stanley as global bonds are facing renewed selling pressure, Stefan Slawinski of BNP Paribas as Google wins the antitrust battle to keep Chrome, and Nancy Lazar of Piper Sandler as we look ahead to jobs data throughout this week. We'll begin this out with the global bond market sell-off showing some signs of easing. Bond yields this morning just about stable in the States and in the UK. As for Japan, still very close to the highs on record. Jitanya Kandari of Morgan Stanley joins us now for more. Jitanya, good morning. It's good to see you. Thanks for dropping by the studio. These global bond market moves, you seem comfortable with things. Things are okay. Are you more comfortable with what's developing in the United States versus what's happening elsewhere?
Yeah, I think there are two things for the bond yields in the United States, right? One is the fiscal and one is inflation, right? On the fiscal, I think there are offsetting factors. There is spending, there's some revenue coming in from tariffs. I don't worry excessively there. On inflation, it's important to keep in mind that though the goods inflation rates are going up because of tariffs, on the services side, inflation has been coming down. And things like rent are a big part of the core CPI. Wages, they are also an integral part of the CPI. So on the services side, you have inflation coming down. So I'm not so worried between the goods and the services inflation. You could have inflation rates of core PCE of 2.83%. So sticky inflation, but not a runaway inflation story that really...
Of course not, but this is ultimately what we're getting at. 3's the new 2, is it not?
It is, and I think based on that, if you look at where we are on a real rates and a 10-year, it seems like fair value. And if Fed were to cut rates, I think that's a high chance. 10-year always comes off when Fed cuts rates historically. So I'm not overly concerned on this run-up in yields. Markets tend to overreact in the short term, but I think based on the economics of the situation, we should be okay.
Well, does it really pull into question this idea of dollar depreciation, though? Because if the United States is dealing with inflation and yields that are going up, well, it looks less bad if the rest of the world is experiencing it and then some, and you see inflation actually running hotter in a place like Japan. So does this story necessarily come together with an ongoing depreciation of the dollar?
It's exactly the point. I think the worry is more on the dollar. So interestingly, from mid-April to date, the dollar's been steady, but you've had a depreciation trend and a counter-trend rally tactically in June to August. I think at this stage, the 2-year and the 5-year differentials, which is typically what drives the dollar versus especially the G3 FX, are now favoring ex-US. So you have that interest rate differentials actually helping ex-US, and the administration wants a weak dollar because that'll help deficits, that'll help trade competitiveness, that'll help the debt. So I think that continues, and that makes international assets appealing.
This, to me, is really a theme that's been throughout the morning. We've heard this from Jamie Rush. We heard this from Greg Peters, the Buy Europe and the European bond story in the wake of the sell-off, more so than the long end of the U.S., because there seems to have been maybe an overestimation of political dysfunction and fiscal dysfunction in Europe. And right now, you're getting compensated for it there, while as you're not getting compensated in the United States. Do you agree with that? Do you think that things have gone a little bit too far outside of the U.S.?
I think so. I think the one thing to keep in mind is Europe now, the inflation has bottomed out. So I don't think ECB will cut rates. The other point is Europe, with the fiscal stimulus, is going to issue a lot of bonds. And I think there's more opportunity outside the US for the first time. Japan is positive, so there are bonds there to buy. And most
자,
importantly,
현재 진입권 9시 30분까지 지켜보고
that Germany is going to take in this process of the fiscal
예상치
spending
이탈
is also
시에는
going
청산 사인
to
드릴
be an
예정이고요.
important piece
하방
of the
압력 있다고
overall
판단 시에는
infrastructure
본전까지
stimulus.
대응이어
And the
나가도록 하겠습니다.
state-led industrial policy that seems to be the driving theme both within and outside the US.
Is this a story you have more confidence playing through equities, bonds, or foreign exchange?
A combination of two. We always look at asset allocation in entirety. I think, you know, the 60-40, thinking about that again, but what in the 60 and what in the 40? I mean, emerging market bonds, local bonds look great. So I think you have to think about it having some store of values like gold or even some Bitcoin. It makes sense. And of course, you know, looking at it across the asset allocation spectrum. I'd say one thing, that in US equities, the operating EPS estimates for the next 6 quarters is about 13% plus. Historically, I was looking at this, there's only a 7% probability of that kind of EPS momentum. So the bar is really high to meet that. Generally, it's about, on average, 8 to 9% operating EPS over 6 quarters in a row. So that is going to, I think that is the more important point here with respect to the equity market, because you really need to meet those expectations.
So you have a preference for European equities, is that fair?
I have a preference for international equities.
Versus the US?
Versus the US. I mean, of course, you know, this is not like boycotting the US. It's like, when all this dust settles, what do you want to own? Like, do you want to have 65-70% in the US, which is the US weight in the index, or with this view of the dollar, with economic traction in different pockets of the world, do you want to divert some of that and rebalance into some of these other economies? I think that's the stance we are taking.
You say some of these other economies, we've talked about Europe, but what about China? What about India? What about some of these other nations that are trying to form alliances and create economies outside of the Western alliance?
Yeah, there definitely seems to be like a Eurasian alliance brewing, and I think every country is going to do that to diversify its trade and relationships and hedge themselves. Lots of these countries have you know, initiated reforms. India, I think that's kind of overdone in terms of the sell-off and the concerns, because the impact on GDP is not that much. I mean, maybe it shaves off 30 to 50 basis points, but it's a domestically demand-driven economy with domestic liquidity. China, with it's a tale of two Chinas, right? There is the old China, which is over-indebted, state-owned, and where there is excess capacity, dragging down productivity. That's not the area to be really, backing. But there is the new China, we call China 3.0, with the AI, with DeepSeek, with how all of this is going to get embedded on the consumer side, especially because China is a very digitized economy. And there are a lot of opportunities in that space as well. So there's a lot going on in the rest of the world that merits attention and investments.
Well, thanks for shining a light on it. It's good to see you. As always, thanks for dropping by. Jitanya Kandari there of Morgan Stanley Investment Management. If you are just joining us, welcome to the programme. Equities bouncing back this morning by 0.5% on the S&P. So bond market jitters in the last 24 hours. We can tell you things are calming down just a little bit stateside and elsewhere as well. Bond yields in America on a US 30-year just about unchanged so far this morning, Lisa, short of 5%.
Yeah, and the fact that it hasn't been able to really cross and sustain above that 5% level is telling. I think it's interesting that this morning, so far, a number of different guests have said the sell-off in European bonds and Japanese bonds, although Japanese bonds maybe less, but European bonds looks more overdone than the one in the United States, where the U.S. has actually been outperforming on the long end versus the rest of the world. That is interesting to me. The ex-U.S. story coming back, that's a theme.
There's been some real resilience in the U.S. debt market. I think it's surprised people. I understand why they're looking now over at Europe and the debt market in the UK and France. Look, I wouldn't understate the difficulties that the UK and France are going to have addressing this problem. And we've seen repeatedly bouts of this, where the market's going to test France repeatedly, and not much has changed. Similar story in the UK. And yields, unfortunately, are still going up and to the right. And unlike equities, that's a problem.
It was a problem for the Liz Truss moment because of the speed. This time we've superseded those levels, and people say it's still under control. We'll make noise about possibly doing something, but wait until November. At what point are authorities going to be prompted to actually make some hard decisions? It seems like not yet.
It's relentless. 30-year in the UK, close to 6%. I'm not going to downplay that. That is getting closer and closer to a big problem. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Back with us, here's Yahira. Hey, Yahira.
Hi, John. We start with that big win for Alphabet. Shares are rising 6% after a judge ruled the search giant won't be forced to sell its Chrome business in a landmark antitrust case. Google will, however, be required to share online search data with its rivals, and moving forward, it won't be able to make contracts exclusive, but can still pay other companies to feature Google products or use them as a default. Meanwhile, Fed Governor Lisa Cook's lawyer blasted President Trump's move to oust her, saying his accusations are based on nothing more than cut-and-paste allegations of mortgage fraud made on social media. He doubled down on arguments he presented last week, saying that Trump lacked valid grounds to fire Cook for cause. Meanwhile, we are seeing Dollar Tree shares falling 3.5% after the discount retailer disappointed investors by saying profit in the current quarter would be little change. The update overshadows the chain boosting its annual outlook by 2%. Dollar Tree now braces for a tougher second half of the year after benefiting from consumers seeking out lower priced goods. That's your Bloomberg Brief. John?
Yahira, thank you. Appreciate it. Up next, the morning calls, plus Stefan Slavinsky of BNP Paribas as Google wins the antitrust battle to keep Chrome. That conversation up next. Live from New York City this morning. Good morning.
자, 현대증권 30분까지 지켜보도록 하겠습니다. 9시 반까지 지켜보고 대응 이어나가도록 하겠습니다.
key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Valuation is always in our mind, but at the end of the day, valuation alone is something that doesn't end bull markets. Going back to Y2K, we've seen a series of asset price inflations. I won't call them bubbles because this is not a bubble in our mind now.
That was Julian Emanuel of Evercore looking for the S&P 500 to grind higher close towards 8K on the S&P 500 by year-end next year. This morning already, an upgrade this time from HSBC for the second time in about a month. They lifted their price target to 6,400 on the S&P in August. It's now 6,500, which is basically, Bramo, where we are right now.
I feel like this is mark to market, and that's what we've seen all year. It was brought down, then brought back up. And even Julian Emanuel, who's so bullish for the end of the next year, is raising his price target for the end of this year to something like 62.50, which is below where we are now. So it just shows how fast we've gone.
Playing catch up, the rally continues. We're bouncing back by 0.5% on the S&P so far this morning. That's the price action. Let's get you some morning calls with one name in focus, Alphabet. First up, JP Morgan raising its price target to 260, saying the court's ruling was much more favorable than anticipated. The second call from Wedbush raising its price target on Alphabet to 245, saying the ruling was a monster win that removes a huge overhang from the stock. And finally, Citizens JMP raising its price target on 250 and maintaining an outperform rating, saying the ruling is a best-case outcome for the name. Joining us now to discuss is Mandeep Singh of Bloomberg Intelligence. Mandeep, good morning, sir. The stock is higher by 6.5%. Let's just start with your initial take. How favorable was this for Alphabet?
I mean, Chrome has so much strategic value for Alphabet that when you think about, generative AI, this is the priced asset that everyone wants. Even OpenAI and Perplexity, openly bid for, being a buyer of Chrome. So,
do you think that helped them?
I certainly think it did, because what it shows the judge, and it was evident, from the time he had the hearings to this remedy phase, where competition in Gen AI is far more than traditional search. And if you look at the 230-page filing, I mean, half of it is AI chatbots and LLMs, and how, competition has increased. So there is an acknowledgement that clearly things have changed, and that's why I think they didn't go with the Chrome divestiture, which was on the table initially.
Is Google doing enough with Chrome to compete with the likes of OpenAI? Isn't that the bigger question, rather than just simply the antitrust case?
Well, they weren't doing, I think, before because of the antitrust case. Now that this is past it, I think they would try for more deeper integration, because think of it this way. If you want a good AI agent, where would you type your query? It's that Chrome browser bar. Like, you don't even want to go in the app and type your query. There is still friction. You can minimize the number of clicks just by doing everything in the browser search bar. And so from that perspective, Google has the data advantage. They may have to syndicate. I mean, that was part of the ruling as well, that they may have to syndicate some of the data. But Google has so much data, user data, live data, local data, that, okay, what do you syndicate? And so from that perspective, the family of apps is what gives Google the advantage, along with the infrastructure, and Chrome is where they interface with the customer. So from that perspective, this is really a big positive for Alphabet.
And Mandeep, stay close. I want to bring in Stefan Slavinsky of BNP Paribas Exane, who's keeping a neutral rating on Alphabet with a 187 price target. Stefan joins us now for more. Stefan, welcome to the programme, sir. I just want to build up on some of the things that Mandeep was talking about. This sharing of data, can you shine a light on that just a little bit more? How much will that be an advantage to some of the competitors of this company?
Yeah, good morning, Jonathan, and thank you for having me. And I think that's going to quickly become the question going forward. Certainly, the ruling that Chrome will not have to be divested is positive. I think that was always seen as a tail risk and not a natural solution here, but still, it was a tail risk, and that can now be removed. But now we need to think about Google opening up some of its search data to competitors, to these qualified competitors. So that's going to now include the likes of OpenAI and Perplexity. It'll be interesting to see which of the big tech competitors take the government up on that offer. Will we see Microsoft? Will we see Meta? Will we see Apple? Will they start to potentially see this as an opportunity to take another shot at search? There's a ticking clock of 5 years to be able to use this data to improve the long tail of search results. That's kind of where some of the AI chatbots have struggled. And so we'll see if they can include that data to improve those outcomes and catch up with Google in more traditional search queries.
Stefan, to Mandeep's point, how much does Chrome or Google have already what they need to generate real artificial intelligence infused responses to the queries in short order after this court case to compete more effectively with the likes of OpenAI?
Google already has everything it needs. It has the most complete tech stack in the industry. Everything from the proprietary TPU, their own GPUs that they have, the large language models with the Gemini family. They literally invented the transformer model and were the founders of these large language models, into those 15 different apps that we were just talking about with 500 million users each. They also have, I think, a culture of innovation and execution, which they probably don't get enough credit for. So they already have everything they need. Maybe they feel like this gives them the green light to continue to better integrate all of those services and try to more forcibly take their market share in traditional search into AI. But also, as we've already seen, they are still behind in terms of consumer adoption. At the end of the day, ChatGPT has 700 million users. And when you look at AI search, you still have ChatGPT and others competing very aggressively with Google. So there's still a branding issue that Google needs to catch up on here.
How much of a discount still remains in Alphabet shares? Because a lot of the legal challenges aren't over. We've already heard from the Department of Justice that they're going to take the fight further, and there are other avenues that they are approaching.
Yeah, so let's keep in mind that Google shares have rallied 20% just in July and August going into this announcement. So I think investors were thinking or hoping or betting on a favorable outcome. You're still trading at around 20 times earnings, around a 10% discount to the historic average. So maybe we see that gap close a bit further. There are still some overhangs. You still have the AI uncertainty overhang about disruption in potentially the business model and clicking on blue links and disruption from new competitors. You still have an overhang for corporate communication. It's a company that doesn't provide guidance, that doesn't interact much with the street. You still have a little bit of an overhang on the regulatory front on the ad tech side with another remedy trial starting later in September. So there are still overhangs, but I think you could see the discount to Meta, which is trading on 23 times, continue to close as Meta begins to struggle with their own Gen AI efforts, and as it looks like Google's getting their act together on their AI capabilities.
And Meta has thrown a lot of money at it. Stefan, appreciate your time. Stefan Slavinsky there of BNP Paribas Exane. Thinking of overhangs, the biggest overhang right now has got to be the most obvious one, that more and more people are gravitating towards using ChatGPT over to using Google search.
Yeah, as Mandeep was saying, though, if you could just type it into Google search and get that same sweet voice whispering, responses to you in the evening, then maybe that reduces the friction of going to a separate app of ChatGPT.
This about your dad's relationship with ChatGPT again?
All I know is that it dominates our conversations.
What is going on over there?
All I can say is it gives us all the answers, so it's really
I've heard
an
some of
enjoyable
those stories.
part. Yeah.
People build some real companionship with.
I mean, I don't want to throw my dad totally under the bus.
Well,
It's just
you've
like
already
an evening conversation. We often have ChatGPT at the table with us.
Mandy, you want to avoid this one. It's good to see you. Thanks for dropping by. From New York City, up next, Nancy Lazar of Piper Sandler.
자, 현재 나스닥 매도 진입권 실시간 대응 중에 있습니다. 자, 약 4분 뒤 30분까지 지켜보고 추가 하방 압력 여부 확인해 보도록 하겠습니다.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Stocks are bouncing back up by 0.4% on the S&P 500. There's still a lot of bulls out there. Julian Emmanuel of Evercore on the
자, 현재 예상보다 저조한 거래량으로 조금 더 지켜보고 대응해 나가도록 하겠습니다.
Max Kettner HSBC, overweight stocks, saying he's seeing signs of a growth reacceleration. Savita Subramaniam of Bank of America, positive tail risk is still underappreciated, especially in light of a potential sales recovery. It's the rebound a lot of people are looking for.
And we heard that from Macy's this morning with the back-to-school sales, that they're really seeing people come back and really buy. Question is, how broad-based is this? Is this just investment in AI, or is this a broader re-acceleration in the economy that can support other aspects of the market? Because we do still see the ISM manufacturing in a downturn, in a contraction territory.
How disruptive will this bond market be? Let's switch up the board and turn to fixed income. 2s, 10s and 30s. Bond yields so far this morning stabilizing, settling down up a single basis point on 10s and just about unchanged so far this morning on 30s.
It depends whether you see this as a good thing or a bad thing. Some people look at this yield curve steepening, the idea of the longer end selling off more, as a positive. Essentially, we wanted a positive yield curve for a long time. It indicates accelerating growth. Other people say this indicates a reacceleration or a volatility in inflation, which it is. Go figure. All I know is that pretty much everyone who comes on the show says that they're buying 1 to 7 year, and out the curve is a little bit more dicey, and that seems to be the trade of the day.
I think it's fair to say that the moves we've seen in the UK and France, that bear steepener, is not a reflection of improving growth. It's more of a reflection of the dire situation politics are in and their ability and willingness to deal with the fiscal situation.
And you put it really well. In the United States, is there a feeling that the bond market is somewhat divorced from the fiscal situation that is equally dysfunctional in many ways, and by some metrics even worse, but where there is the growth backdrop, there is the AI promise, there is the privilege of acting recklessly with the dollar as the reserve currency?
Look, for all the freak out that we had back in April about investors potentially dumping US assets, I think we've got to highlight the fact that US debt has been remarkably stable in the face of what's happened elsewhere. Just chart 10s and 30s, eyeball it. We're not seeing major moves up and to the right like we are in the UK and France.
현재 약보합권에서 실시간 대응 중에 있습니다. 조금 더 지켜보도록 하겠습니다.
I am going to buy the US because it will continue with the most strength. So I've gotten just as much pushback as we have calls on the other side.
Yeah, it's going to take a lot for that to change.
I mean, there's a lot of structural buying, and there also is a question of institutions in the U.S. And there's a huge consumer base, both from investment as well as actual consumption.
Some buying this morning. Stocks are higher by about 1/3 of 1%, rolling over just a little bit with 60 minutes. Less than 60 minutes to go until the opening bell. With your morning movers, some single names. Here's Danny Berger. Hey, Danny.
Hey, John. This market getting a big helping hand from Google this morning. Alphabet shares rallying up 6.7% after avoiding the harshest of punishments for its antitrust case. It won't have to sell off Chrome. And as part of that, it can continue its revenue sharing agreement with Apple for making Chrome its default browser. So that's why you're also seeing Apple shares. Those are up 3.5%. As Lisa mentioned, we did get Macy's earnings about a little over an hour ago, about an hour and a half ago. A beat and a raise. Strong results from Macy's showing that the consumer is still getting out there and buying a company which has had to engineer a turnaround. Shares are up 13.7%. I will just note that they did say that the consumer, especially going into the second half, is looking more fickle and more choiceful. That choiceful consumer also leading to problems for Dollar Tree. Those shares down 5.5% this morning. A beat and a raise, but the problem for them was their raise was for the entirety of the year. The current quarter that we're in, there appeared to be some weakness or at least some disappointment. They said that the third quarter is going to look much like the same as the prior.
자, 여기서 끊어보도록 하겠습니다. 자, 수익 청산 사인 드리도록 하겠습니다. 자, 수익 청산하겠습니다. 해당 증권 수익 청산 사인 드립니다.
Danny, thank you. Thanks for this morning. Look out for Danny Berger alongside Matt Medder in about 25 minutes' time for Bloomberg Open Interest at 9 a.m. Eastern Time. So that's the situation with single names. Let's turn to the economy.
수익 청산 사인 드립니다.
The labour market is just around the corner. Jobs data coming at 10 a.m. Eastern Time ahead of the highly anticipated August payrolls report due out on Friday. With the latest, here's Mike McKee. Good morning, Mike.
Good morning, John. Well, I was just talking with Mark Cabana in the green room about how we're going to be looking at JOLTS and we're going to be looking at ADP because there are a lot of concerns about whether or not the job market is slowing. And
주문 청산이 완료되었습니다.
I do want to push back on the idea, though, that the bond market or anyone else should go into Friday's labor market report thinking that there is something statistically wrong with it because of what the president has said. My beautiful chart to show this isn't working. But basically, we had 253,000 jobs revised away at the last report. In January of 2024, we had 234,000 revised away in just 1 month. So it can happen. It's not unusual. Here's the problem. What we're seeing is fewer people, fewer businesses responding to the BLS surveys in the first month. But when you look out at the final revision after 2 more months, the response rate hasn't really changed. So it's not that people aren't responding, it's that they're responding more slowly. Look at March 2025. We don't have the April revisions yet. 42.6% for the initial, but 94% basically for the revision, not very different from what we've been seeing in all these other years. So the data are going to be as good as they can be and statistically accurate as they can be after the first revision. So, or second revision. So you can go into it with some confidence in what the BLS is telling you is accurate at the right time.
Mike, there will be a conversation, of course.
파일 자료로 보내드렸습니다. 자, 3차 진입뷰 대기하도록 하겠습니다. 이어서 3차 진입뷰 대기하도록 하겠습니다.
One is that you could try to make responses mandatory, although that is a lot harder to do. The BLS has been working on trying to get more people to enter their numbers electronically. That could be done, and then maybe increasing the survey size or increasing the frequency of the surveys so that they get these revisions more quickly are other ideas people are talking about. And then, of course, the standby is give them more money so they can update their computer systems and get all this working more quickly.
That's one way of doing it. Mike McKee, thank you, sir. Appreciate you breaking that down. Michael McKee there of Bloomberg breaking down the labour market data still to come this week. Nancy Lazar, the chief global economist at Piper Sandler, is bracing for
자, 진입 사인 드리도록 하겠습니다. 자, 매도 진입 3계약 사인 드립니다.
What's a soft employment
자,
report?
3계약 매도 진입입니다. 진입 사인 드립니다.
체결되었습니다. 확인 바랍니다.
48.50입니다.
Isn't 80 good these days?
Probably 80 is better than something closer to zero, to be sure. But it is a very, very clear shift down. And you see it in a lot of data. Companies aren't hiring. You see that in continuing claims. They're not firing aggressively. Initial claims are still
자,
relatively
목표 수익금까지 천천히 대응 이어나가도록 하겠습니다. 3차 진입bil 매도 진입 사인 드렸습니다.
Reluctant to leave. And just ask consumers. I mean, the Conference Board survey of is it hard to get a job or is it easy to get a job is a metric I've used my entire career, and consumers say it is hard to get a job. So there's clearly been a shift down in the labor market. Why? Companies are trying to protect their profit margins.
Is 80,000 an even worse number because of the downward revisions? To Mike's point that the longer you wait, the more unclear the data is in the short run, but longer term you do get just as clear of a look in terms of responses.
So the household employment data, which comes out with the unemployment rate, actually historically at turning points is better than payroll. I've studied this again my entire career. It was first written about in the 1970s. Unlike payroll, the household employment data aren't revised. There's a once-a-year population adjustment, but you can smooth that out. There's been no growth in the household employment survey for the past 12 months. And then on next Tuesday, you're going to see the QCEW, the quarterly census of employment and wages. And that's going to likely show a very sharp reduction in payroll from March of 25 back over the past year of about at least 800,000. That is, payroll is going to start to look more like the household data. Consumers know it's a weak job market. They're cutting back on highly cyclical stuff, both on the goods side and on the service side. So the idea that you're getting new news from the payroll report to me is a little misleading. Consumers have already reacted to this weak employment backdrop.
When does this turn become a problem? Because it's not a downturn. It's not a downturn yet. And it doesn't seem to be heading toward any kind of recession. But this low hire, low fire dynamic has continued and people don't feel very good. But companies are doing just fine, as we see in the earnings. So when does this become a problem?
So that's so important that companies are doing well in this environment. Before you can see an upturn in the job market, companies have to make money. That's been a beauty of the U.S. economy over the past decades, that companies are allowed to stop hiring and or in some cases fire people so they can rebuild their profitability, and that then gives them the ability to hire people. So I think some of the most bullish news for employment in 26 is the fact that 2Q S&P earnings came in double what they were supposed to have been and hit a record high. Prior to every upturn in employment growth, you first need an upturn in earnings and profits, and we're seeing it. So kudos to American companies.
Is that what you're forecasting now, a rebound in economic activity?
We are. This year, you're 1.5%, but you're already seeing capital spending turn up. Individual companies are seeing it. You saw it in the new order data yesterday. Why is that happening? Well, one, the Fed cut rates 100 basis points a year ago, and it takes about a year for that to work through the system. Second, you do have this full capex depreciation, which is the most significant capital spending booster shot since Reagan in the early 80s. You're seeing it in company data. So we have 3% GDP growth next year. And we don't think 3 is the new 2. We think next year inflation does shift back down to 2%. You'll lap the tariff increases, and you'll also see further acceleration in productivity, slowing unit
That's
unit
a great
costs.
setup. You're looking for 3% GDP, 2% inflation. Where's the Fed in all of that?
We don't need an aggressive Fed in this cycle.
You might get one.
That would make me worried about inflation in the back half of 26. You have stronger potential GDP growth, which is about 2.5%. Fed funds are pretty much in line with that. Nominal GDP growth of about 5. Fed funds are a little bit lower than that. The problems of the 70s happened because the Fed would shove rates down way below nominal growth, creating a boom and then eventual bust cycle. And so we think maybe one cut would be healthy. But more than that, I would then start to worry about inflation.
Okay, let's take a beat. Nancy, new Fed chair comes along. Huge selection process. And they're going to deliver one cut in 2026.
Again, if the economy is if you go back and look at the 90s, which is where we think there are echoes of the 90s, the tech obviously strength in the 1990s. Greenspan in 95, I believe, cut rates just once. And you had 3.5% GDP growth with inflation slowing. You didn't need a lower interest rate environment because you had healthy potential GDP growth, stronger productivity growth, and very strong corporate profits. And those were the things that were driving growth, not lower interest rates. Again, that creates problems like another house price bubble and/or a boom in nominal GDP growth, which then opens the door to inflation.
How has artificial intelligence changed the nature of that rebound, given the fact that this isn't necessarily going to be a job-full recovery that can be equally distributed to a lot of different people in different sectors?
So under the hood, there's always creative destruction in the employment data. Just look at the retail data when Amazon came on in the 1990s. You decimated retail employment in certain sectors, online touched sectors in particular. But at the end of the day, overall retail employment rose. And so creative destruction within the job market has gone on, not just back in the early 1900s, but even over the past 10, 20 years. Tech employment has not been a driver of the employment cycle. So I view AI as more of a productivity-enhancing, profit-boosting mechanism that actually is going to create more jobs because companies are going to have stronger earnings.
You're using it, and you love the Beige Book.
Yeah.
Can you tell us what you're doing that you think actually how it affects your job?
Well, for us, my colleagues are very talented, and using ChatGPT-5, you can actually write code for the Beige Book and get a sense of what the direction of the economy is from AI. So I'm a product of technological innovation. I started with a typewriter, obviously, then I went to a computer, except I'll stop. But technological innovation in this industry is not new. It just improves our ability to do, but hopefully, not always, a better economic outlook.
And Nancy, this was great. Appreciate your time.
Thank you.
As always, Nancy Lazare of Piper Sandler with some pretty punchy calls for 2026. 3% GDP growth, 2% inflation, and maybe only one interest rate cut from this Federal Reserve. I don't think that's going to get you the job if you walk into the White House later this year and say you're going to cut rates maybe once next year.
This is something that nobody is pricing in right now, or very few people. Nancy is, but very few
자,
people.
현재 매도 진입권 실시간 대응 이어나가도록 하겠습니다. 자, 정각까지 보도록 하겠습니다. 현재 시간대 저조한 거래량으로 정각까지 보도록 하겠습니다.
Market stabilizing just a touch so far this morning. Let's give you an update on stories elsewhere with your Bloomberg brief. Here's Yahara. Hey, Yahara.
Hi, John. The U.S. Treasury Secretary Scott Bessent will start interviewing candidates to replace Fed Chair Jay Powell this Friday. The Wall Street Journal is reporting that Bessent will talk to candidates either in person or by video conference. There are 11 contenders for the job, and Bessent plans to recommend a finalist to President Trump. Meanwhile, we are seeing shares of Macy's rising 13% in the pre-market. The retailer raised its annual outlook and reported its best comparable sales growth in 12 quarters. It's the latest sign consumers are still spending despite concerns about inflation. Macy's also raised its full-year net sales guidance to as much as $21.45 billion, with the CEO saying this is the beginning of a momentum change at Macy's. And at the U.S. Open, Novak Djokovic will play Carlos Alcaraz in a blockbuster semifinal round on Friday after the Serbian defeated American Taylor Fritz last night in a close match. And number 4-seeded American Jessica Pegula heads to a Grand Slam semifinal for just the second time in her career. She will face Aryna Sabalenka tomorrow. That will be a rematch of last year's championship, which Aryna, of course, won. That's your Bloomberg brief. John?
Yahara, thank you. I just get the feeling if Sabalenka turns up for anything, she wins. If she turns up.
Well, isn't that true with any of us? Actually, no, not at all. not that kind of level of tennis. But yes, she is incredibly good. But I watched the game. I know what you're talking about with the Osaka versus that particular game. And I'm interested in some of the other games, not just the, Sabalenka.
Okay, good. All right.
Anyway, this was great.
Thanks for that. Up next on the program, I think. Let's set you up for a day ahead, no tennis. Plus, Mark Cabana of Bank of America joins us to talk about this bond market. From New York, you're watching Bloomberg TV.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road.
자, 잠시 후 10분 뒤 약 10시에 무살렘 총재 연설 예정되어 있습니다. 연준의
We're bringing you
무살렘
more
총재
behind-the-scenes
연설 예정되어
conversations
있습니다.
with the biggest names in sports,
자, 현재
business, and
매도
culture,
진입권
like Melody
10시까지
I started to
지켜보고
study women's
대응해
sports
나가도록
like an
하겠습니다.
11-year-old studies baseball statistics, and I got dangerous in seeing up arrows, up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
There might be even more room to run on this in terms of the concerns around Fed independence, the concerns around inflation, the concerns about a government shutdown. We think that all reinforces at least a steepening bias. All of these things that we speak up from, in terms of Washington really do reinforce this idea of a bond steepening.
We've seen a lot of that, not just in America, but around the world. That was Libby Cantrell of PIMCO. The good news in the bond market so far this morning, things have settled down. In the equity market, we are firmer by about a third of 1% on the S&P 500. The opening bell just around the corner. As for the week ahead and the day ahead is shaping up as follows. At 10 a.m. Eastern Time, durable goods and JOLTS data. At 11 a.m., Poland's president visits the White House. Look out for that. At 2 p.m., the Fed Beige Book. Plus tomorrow, ADP, another round of claims, and a Senate hearing on Stephen Myron's Fed nomination. And then, of course, the big one on Friday, the payrolls report just around the corner. Just to stay on the markets, global bonds continuing to sell off, particularly here in the United States over the last 24 hours. Things settling down, though, over the last morning or so. The 30-year bond yield coming within just 1 basis point of 5%. in the last session. Mark Cabana, the head of US rate strategy at Bank of America Global Research, is with us around the table for more. Mark, good morning.
Good morning.
It's good to see you.
Likewise.
A lot's changed. What's changed for you?
자, 그리고 현재 매도 진입권 대응 이어나가면서 자, 원로이사 CNBC 인터뷰 내용 설명 한번 도와드리도록 하겠습니다. 자, 크리스토퍼 원로이사 CNBC 인터뷰 내용이고요. 자, 다음 회의 9월에 금리 인하를 지지를 하고 있고요. 해야 한다 말하는 바가 있습니다. 자, 그리고 고용시장에 관련해서는 고용시장이 둔화되기 시작하면 빠르게 나빠질 수 있으므로 연준이 선제적으로 대응을 해야 한다 밝힌 바가 있고요. 그리고 향후 3에서 6개월 동안 여러 차례 금리 인하 가능성을 열어두되 데이터 기반 유연한 접근이 필요하다라고 밝힌 바가 있습니다. 자, 그리고 100에서 150bp까지 금리 인하가 가능하다고 밝혔고요. 데이터에 따라 금리 인하가 결정될 것이다 라고 밝힌 바가 있습니다.
And we think that you're going to increasingly hear these types of arguments from individuals that are being considered to adopt leadership positions at the Fed. I'll certainly be listening for that on Thursday with Myron's testimony because we have heard from other, let's say, Fed chair contenders that they're open to this idea. And if the Fed does indeed adopt that type of approach, that opens up the range of outcomes for where the funds rate can go, well below 3%. We think you want to be received 5-year OIS to benefit from that. It also means that you should be expecting that longer run inflation expectations move up because they are still very well anchored. We agree with the Fed's
자, 현재 매도 세계약 기준 약 50만 원 손실권에 있습니다. 자, 대응 이어나가도록 하겠습니다.
We think that the nominal curve should also be steepening in that type of environment. Finally, we like being short 30-year asset swap spreads because we do worry about some of this supply-demand dynamic at the back end of the rates curve. If the Fed is, let's say, cutting to rates lower than what many of us would think are justified by fundamentals today, who's going to buy the bond? If you're worried about upside inflation risks and the deficit is still not improving materially, who's going to take down all that long duration treasury supply? So we think you want to be positioned for that, and we like being short 30-year asset swap spreads to do so.
So as you talk, I'm thinking I'm going to hide in gold. I'm going to hide in the most pro-growth stocks because essentially they're going to juice everything. I mean, essentially, isn't what you're saying really positive for stocks, really positive for gold, terrible for the dollar, and don't even touch that 30-year bond?
Yes, 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 yes.
Okay, so that's basically what you're looking for right now.
And we just think that, again, you can focus on fundamentals. And fundamentals and our economists, and kudos to them, are still very much rooted in that. They're thinking this is an economy that's not headed into a recession, where you've got stagflationary risks, where inflation is going to be 3% or higher by the end of the year, and where the Fed is running the risk of a policy mistake by cutting later this year, if that's indeed what they do. And so they're thinking, why would the Fed be doing this? And I understand that from a fundamental perspective. But we've all seen the headlines. We've all seen, at least, or we've heard some of the approaches that individuals who are being nominated or considered for Fed leadership positions are espousing. And all of those, at least to me as a rate strategist, say, why are they going to stop at 3? Why would they do that? Waller is just saying, no, we're going to cut to neutral, or I think we should be heading to neutral, and I think neutral is 3%, but he'll be the first to tell you that he doesn't know where neutral is. And then once you start to contemplate some of these other arguments, we suspect about lower natural rate of unemployment and really strong GDP and deficit financing levels, which is not in the Fed's mandate, but certainly you hear that line of argument from administration officials. Once that creeps into the dialogue, then why would they be stopping at 3? So we just think, again, that the distribution of rate outcomes is much greater to the downside than what the market is currently pricing. Not necessarily due to fundamentals, but due to a shift in the approach for how the Fed will likely be thinking about setting monetary policy.
You know, I give you a lot of credit for trying to force people to think outside a conventional framework, because I think that what we could see next year could be very unconventional.
The idea of targeting something sub 4.2% on the jobs market and ignoring the inflation possibility? I'm just thinking, I mean, I understand why people are pro-risk in that environment, because why wouldn't you be pro-risk at a time where they're trying to juice growth at the expense potentially of inflation?
No, we've got to run.
I do
We're
think...
against the clock. 15, 20 seconds.
Okay, so what stops this? We think two things stop this. Number one, popular discontent with inflation, the voter. But I don't know about you, I would imagine that it takes above 3% inflation to really bring it, individuals out to the ballot box on this issue. 5. Or 2, loss of control on the back end. And you're going to be looking at best cutting auction sizes in that event, or potentially the Fed using the balance sheet.
Nice, as always. Always take it down to the wire, don't you? Michael Banner of Bank of America, thank you. From New York City, this was Bloomberg Surveillance.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Let's talk about this villa. Very traditional. A lot of things of the past.
I live my very first independent life in the farmhouse. And I built it by the memory of the farmhouse, the philosophy they believe, yin, yang, 5 elements, the concept of the life, of the happiness. They build this kind of roof, like boat, and man and woman, and bowl of rice. Everyone should be happy if have somewhere to live, something to eat, and someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, I'm a lucky man because not everyone should have the experience of the war and peace, poor and rich, technology progress, a change during my life, rich by experience.
There's an appreciation for what you have now.
And therefore, peace is the most important thing for today, for Vietnamese, and I think for human being, for the world.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Nasseri, and Los Angeles royalty Will Obey. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azar. You should expect newsy interviews from industry leaders, meaningful business networking, and of course,
자, 정각 1분 전에 있습니다.
some of the best chefs and food trucks from my hometown of Los Angeles.
10시에 예정되어 있는 이벤트로는 무살렘 총재 연설 예정되어 있습니다. 연준의 무살렘 총재 연설 예정되어 있습니다.
/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Stability returns to this market. The bond sell-off eases. Google spared the fate of a breakup. 30 minutes until the start of equity trading. I'm Danny Berger. Matt Miller is off. Bloomberg Open Interest starts right now. Coming up, stocks stage a modest rebound after 2 days of losses, with antitrust relief for Google boosting big tech. Meanwhile, Macy's raises its outlook, but joins a chorus of retailers warning of a consumer pullback. And in a week packed with data, today's jolts may show more labor market cooling. Let's look at some of the stocks on the move this morning, because we have had some earnings, specifically retailers, to kick things off. Macy's up 14.8%, raising its annual outlook, reporting its best comparable sales growth in 12 quarters. Then there's Dollar Tree also raising its outlook for 2025. More consumers looking for lower price goods, but investors are concerned about the sustainability
자,
of
현재
that growth.
보합권에서 수익권 진입하였습니다. 좀 더 지켜보고 목표 수익권에서 수익 청산 사인드리도록 하겠습니다.
Let's dig more into this story because it is the boat that is lifting up all ships. And let's get into it with our Bloomberg Tech co-host, Caroline Hyde. Caroline, wonderful to see you this morning.
You too.
It's a really big win for Google here.
It certainly seems so. Look, this could open at a record high in terms of share price. We could see 7% pre-market moves spill into the actual market open. You're seeing the similar moves actually for Apple as well. These are the two key gainers on what, well, Muffet-Nathanson, the analyst over there, is saying they didn't just dodge a bullet, they dodged a missile here. So suddenly, all of that overhang on the stock price, that built-in worry and nervousness about regulatory impact, still
해당 주식권 포지션 정리 후에 무살렘 총재 연설 내용 간추려서 설명 도와드리도록 하겠습니다. 현재 약보합권에서 대응 이루어지고 있습니다.
Regulatory win on their hands, and you see so many price targets being upped by analysts. They have zero sales from the analyst community for Alphabet right
and
now.
I saw Dan Ives writing that he's upgrading their price targets, saying that the government folded like a cheap suit, and I think we can say that the man knows suits. So there is that. You mentioned Apple. So how big of this and how necessary was this for Apple to continue to get their revenue from Alphabet on some of the Google Chrome search?
I mean, it's a good chunk of change, isn't it? About $20 billion per year. That's not huge in the gargantuan amount of revenue that Apple pulls in, but the fact that there's no costs involved, I mean, this falls straight to the bottom line. So from a profitability perspective for Apple, this was very necessary. And so we are still seeing the payments hold. This was almost the big win for both Alphabet and Apple in a longer term perspective. The fact that they're still able, that Google can pay for the area to get the PR basically for its search tools. You're not suddenly going to have to go immediately being presented with the alternatives. They can keep flowing money, and ultimately that's important for a lot of other companies' business models, was what Judge Mehta ultimately felt. But I think the real takeaway from this is that AI has changed the game. This is why Alphabet, actually compared to the other big tech names, is relatively lower valued. Even after this increase in their share price, people still feel that there is erosion of share that is coming away from search because generative AI has changed up the landscape. Perplexity is now in the game. OpenAI. There is that nervousness, which is why we're still seeing generally the shares and the company trade at a much lower valuation compared to peers. But more broadly, I think this is a huge weight and sigh of relief for the investor base of Alphabet, but huge sigh of relief for Apple in and of itself.
I mean, it is just this great irony that OpenAI's rise literally saved Google from a breakup. Yes. So there you have it. Caroline, thank you so much for joining on that. That is Bloomberg Tech's Caroline Hyde. Now, a pair of retailers have also boosted their outlooks. Both Macy's and Dollar Tree were out with earnings before the bell. Both companies, again, had a higher outlook, but you can see the difference in share prices. Macy's, though, warned of a fickle consumer. Bloomberg consumer editor Emily Cohen joins us now. So, Emily, let's tackle two of these separately because they're having a clear difference of reaction in the market. Macy's, a company that has long been trying to engineer a turnaround. Does this suggest that the turnaround is here?
I think the turnaround is starting. I think we're starting to see stronger sales in the 150 stores that Macy's decided to prioritize than the overall store base, which is a sign that Tony Spring's strategy.
자, 현재 증권 실시간 대응 이어나가도록 하겠습니다.
But yes, he did have some cautious signs on the call today, warned of a surgical shopper, said that price increases are here and also coming. So we're eager to see how shoppers respond during the holiday shopping season.
It's that crucial period when we don't really know exactly the full picture of the consumer. There's a lot of varying reports from these companies. So how does Dollar Tree play into this, considering that they also capture that lower income consumer?
Yeah, I think Dollar Tree is in a tough spot. I think expectations are really high for them. This is a moment for them.
자, 추가 매도 사인 드리도록 하겠습니다. 추가 매도 두 개야. 추가 매도 사인 드립니다. 체결되었습니다.
확인 바랍니다.
425.20입니다. 425.20 추가 매도 사인 드렸습니다.
But there's really strong signs
추가
on the
매도
sales side
사인
there,
드렸습니다.
and you know, they're benefiting from higher income consumers trading down and looking for value, and that's happening.
Yeah, it's something we've seen again throughout the earnings season. Emily, thank you so much for that wrap up.
자, 본장 개장까지 약 25분을 앞두고 있습니다. 좀 더 지켜보고
factory
대응
and
이어나가도록
durable goods
하겠습니다.
orders. Let's look ahead to the data with Michael McKee, Bloomberg's international economics and policy correspondent. Mike, set us up. What are we expecting from the data?
Well, you know, JOLTS used to be really, really important, and then it wasn't because jobs were filled. When there were a lot of openings and the companies couldn't find anybody, we cared about the data. We haven't in a while. Talking with Mark Cabana from Bank of America this morning, he said, yeah, but now we got to pay attention to that and to ADP because we don't know what's happening with the jobs report. So with that in mind, we're going to be looking at JOLTS today, and we are expecting a slight decline. The quits rate isn't forecast, but the quits rate is something that everybody watches, including the Fed, to see whether people think they can get more, get another job. And as long as that stays stable, it doesn't suggest the economy is falling down. Factory orders is going to be really interesting as well. This is sort of a revision of the durable goods numbers we already got, and they add in non-durable goods numbers. And as you can see, we had a big decline in the prior month. But the question is, do we see a revision upward this month for durable orders? Because in the second quarter, the GDP revision showed that there was a big increase in during the revision in business spending. If business spending is higher, then that's good news for the economy going forward. So we'll keep an eye on that to see what we get from the factory orders durable goods numbers today.
Well, meanwhile, you have the sideshow that often takes center stage of the makeup of the Fed itself and what that's going to look like going forward. Yesterday, the Wall Street Journal had this story that Bessent would start the search for the Fed chair. Curiously, Governor Waller was on media earlier this morning saying that he didn't have a meeting scheduled with him, but maybe it gets scheduled later. What are you looking out for between that and also Myron's confirmation hearing?
Well, this could be, maybe that was Chris Waller's interview.
Maybe, yeah, true.
We know the president watches all these things, and of course his people, the ones at the top of the list here, Warsh and Hassett, have been on TV regularly, so he kind of knows what they're thinking. Also, Michelle Bowman, Philip Jefferson from the Fed, Jim Bullard, we've talked to him about that, and then also Lori Logan from the Dallas Fed, and the others are people who are not connected to the Fed now. Larry Lindsay was on the Fed during the George H.W. Bush years. That's a lot of people. And Bessent seems to be saying, I want a deep bench. I want a lot of people to give to the president in terms of potential names. But the president keeps saying there's only 3 people that he's looking at. We assume the 2 Kevins, and everybody has assumed Waller as sort of the fallback choice. And so do these others really have a chance? That's going to be the interesting question. And of course, nobody knows because it's Donald Trump, and Donald Trump does what Donald Trump wants.
I just have to wonder, Mike, how much of the recent long-end bond sell-off is coloring all of this, not just the candidate search, but in terms of the data coming in. If you do have weaker data coming and a Fed that wants to cut, but continued pressure on the long end of this yield curve, how does that change with the trajectory of where we're going?
Well, the Fed will argue that they don't control the long end. There's not much they can do about it. Waller today said, you look at 30s, they have moved, 10s have not really moved. So you'd think if the long end was really concerned about something, that both would have moved. And the short end is going to keep moving down because that's the one that's tied to the Fed. So they have to worry about what's going on at the short end, and they can't really be concerned with what's going on at the long end because if it's moving because of deficit concerns, the Fed can't do anything about that. They do have to kind of keep an eye on the 10s because they want to see if inflation is the issue, but they're going to get data on inflation. So they're kind of looking past that at the moment, unless it all leads to some sort of market collapse.
That would certainly need their attention. Well, we're going to get a lot of data this week. Mike, thank you for helping us set it up. Again, JOLTS data coming later, and that is Bloomberg's Michael McKee. A quick check on your future session this morning. As we've been talking about, the bond market sell-off easing, and that's helping to boost stocks. Not small caps, though. Those are still down by 1/3 of 1%. Also helping this morning is Google and Apple shares moving higher. Tech outperforms up 0.7%. The S&P up 0.3%, with your opening bell about 20 minutes away. Coming up, commodity moves are also driving stocks this morning. Traders weighing Fed rate cut bets and reports of an OPEC plus supply hike. We're going to have more on that next as gold continues to trade at record highs. All of that coming up on Bloomberg Open Interest.
right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Our applications have been received positively both in Kenya and UAE, and we are optimistic that we should be able to open the office in the fourth quarter. We think
자, 본장 개장까지 약 18분 앞두고 있습니다. 자, 개장 이후 움직임까지 살펴보고 대응 이어나가도록 하겠습니다.
Logistics for trade, and it is a strong center for investment, and we are seeing increasingly the global GDP is increasingly becoming overweight in Asia and Middle East. So that linkage with the middle income segments growing in India and China will provide a very strong market.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Now to high interest, a look at what's making headlines around the world. Campbell's delivering better than expected second quarter earnings driven by Milano cookie sales. Organic snack sales, those though fell 2%, less than half the rate that analysts had predicted. We're also watching Tesla this morning. Sales are continuing to slump across Europe. The Federal Motor Transport Authority saying that new Tesla vehicle registrations dropped 39% in Germany last month. Shares, though, still higher, 1.7%. Meanwhile, gold stocks are in focus after the precious metal hit a fresh new record high, fueled by rate cut bets and growing debt concerns. Gold has risen more than a third this year, making it one of the best performing major commodities. And for more on commodity moves, we're joined now by Simon Casey, Bloomberg's managing editor for energy and commodities in America. So Simon, gold keeps pushing higher, higher than 3,500. There was a time when we said there'd be demand destruction at 2,200, yet here we are. What continues to push it higher?
Well, right now it's the Fed concerns, speculation the Fed will cut, speculation over the concern over the independence of the Fed. As we all know, it's one of the major stories of the last few months. Gold has always been a safe haven historically. We are in interesting times, shall we say. We have concerns about the trade war, concerns about the US economy, the Fed. All those are coming together. Investors are taking a fresh look at gold right now.
I think the gold miner stocks are particularly interesting too, because initially they were left out of this rally. And presumably for the gold miners to do well, it kind of takes some time to capitalize off of the higher gold prices. The fact that this is a sector up 91% suggests that the run in gold is also longer lasting.
Yeah, as you say, there's a bit of a lag there, and there's some concern if we go back to the beginning of the year that gold equities weren't really taking off. And historically, gold mining stocks are kind of like a levered play on the gold price. So there is a bit of a time lag, but I think, as you say, now there's real sort of confidence behind gold. If you look at what Goldman Sachs is forecasting for the end of the year, gold could go higher to about 3,700. Maybe next year we could look at $4,000. So there's quite a lot of bullish sentiment out there right now.
Meanwhile, in other commodity moves, there's oil that has been falling this morning. Yeah. OPEC Plus will be meeting on Sunday. What are the expectations?
Well, according to a Reuters report earlier, they're going to discuss another supply increase. And if you remember, throughout this year, OPEC Plus has rather sort of wrong-footed the oil market at times by enthusiastically bringing this production back onto the market. And while the price has been under pressure as a result, it hasn't collapsed. And that really suggests that they've been fairly successful in regaining market share. And perhaps with that experience in mind, they're taking a fresh look. There's another tranche of production that has been idled during the post-pandemic period, essentially. I think it's around about 1.5 million barrels per day. And if they can try and push that back onto the market over maybe the next year or so, potentially, that's more market share that they're going to reclaim ultimately. But that's bearish for prices in the medium term.
I was going to say, that's the supply side, but does it get much more bearish if you're having that increase, especially as you get later on to this year and next year, if there is a real concern about growth weakening in the world's largest economies?
Yeah, look, throughout the whole of this year, there's been real concern back end of this year. We're now getting close to the fourth quarter. The driving season in the US is officially over. We've just had Labor Day. Meanwhile, in Asia, Chinese demand is very unimpressive. So those concerns haven't gone away. But what we have seen go back to the supply side, US production is close to plateauing. And already in some other parts of the world, we're seeing production start to respond to the lower levels we've seen this year. So again, there is a plausible case to say OPEC Plus has been fairly successful here in trying to regain market share.
Is OPEC Plus's success at putting more barrels out onto the market and lowering prices also a success for this White House?
That's a good question. I mean, energy dominance, Trump coming in January and proclaiming this is what he wanted to do. Lower oil prices are good. I mean, I think that's his primary concern. He would like to support US oil production. He would like to see that growth continue. It's plateauing, but it's not falling precipitously. But let's bear in mind that US energy dominance, the agenda encompasses everything. It's natural gas, nuclear. Natural gas production is still climbing. Nuclear, there's quite a lot of enthusiasm there. We'll see what the results come through. So it's quite a broad agenda. I think you'd be careful to sort of say it's a failure just yet.
Fair enough. All right, Simon, thank you so much for joining us this morning. Really appreciate that. Simon Casey, Bloomberg's managing editor for energy and commodities in Americas. And you are seeing energy stocks falling in the pre-market trade, the likes of Exxon, for example, dropping more than 1% off those moves. But elsewhere, it is stability and even gains after 2 days of selling, where worries were abound over big tech and higher bond yields. All of that taking a breather, with bonds not getting past 5% for the long end, and Google coming to save the rest of this market after a decision that does not force them to break off their Chrome. That is a win, and it has tech stocks futures for the NASDAQ up 0.7%. Coming up on the show, Crossmark's Victoria Fernandez talks about AI bubble concerns and warnings about the consumer as we enter the holiday season after we had the likes of Macy's, Dollar Tree reporting earnings. All that coming up. You're watching Bloomberg TV.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually
자, 현재 본장 개장까지 약 10분을 앞두고 있습니다. 현재 매도 진입 5개야 실시간 대응 중에 있습니다. 자, 본장 이후 본장 이후 개장 이후 좀 살펴보고 사인드리도록 하겠습니다.
Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Valuation is always in our mind, but at the end of the day, valuation alone is something that doesn't end bull markets. We're not even 3 years into the introduction of ChatGPT, and it is already pervading every aspect of society, every industry. And what 2025 is showing us is that companies are starting to be able to demonstrate how it actually helps business. And to us, that's a recipe for higher stock prices.
Evercore's Julian Emanuel, after raising the firm's S&P 500 price target to 7,750 by the end of 2026, all on the back of AI. Victoria Fernandez, Chief Market Strategist at Crossmark Global Investments, joins us now. Victoria, great to see you. And look, it's not just Julian that is bullish. It is HSBC also raising their target for the S&P 500 today. Steve Chavarone at Federated Hermes saying, buy the dips, earning is strong, AI is with us. After yesterday's wobble, to what degree does that very bullish thesis remain intact?
I think it remains intact to an extent because the market really seems to just be looking through a lot of the elements that normally would tell us to be more cautious. So, I mean, we look at valuations, we're at 23 times on the market. Normally that would give you a little bit of pause, but not here. We have tariffs. The market seems to be looking through a lot of the tariff issues that we're going to have and believing that we're going to continue to have strong earnings. And we have. Earnings have surprised to the upside. I think that's one of the biggest reasons we continue to see a tailwind to this market. And every time there's something that we think will maybe have some consolidation, like yesterday, we thought maybe we would get some pullback there. You have some positive news like we saw with Alphabet that really just sent the tech sector back up this morning, supporting all of this. So you do all that, you add in the Fed easing that the market has already priced in and assumes we're going to have, and I think you continue to have these tailwinds to push us higher, at least in the near term. Doesn't mean there won't be volatility, Danny, but I do think the path of least resistance right now is higher.
To your point, Victoria, you get the news coming out that Google doesn't have to spin out Chrome, and it literally lifts the entirety of this market. It's what helped turn things around. Is that in itself, though, not worrisome that you can have these individual stocks? Before it was NVIDIA to the downside earlier this week, but individual stocks continuing to have such a sway in these indices as valuations and weightings increase.
Yeah, I mean, and it's especially true when we look at these names you're talking about. They're all part of that Mag 7, right? Mag 7 was what, 36% of the earnings that we saw. I mean, it's a huge component that we see in this market. And so you have positive news for one, it flows through to the other, like to Apple. Apple had been a laggard for much of this year, and now this is a pop to them as well. So yes, there's a lot of concentration in these names within the market. They tend to drive the market up or down. So positive news with any of them really drives the thesis. We would love to see the rest of the 493 really pick it up and see a broadening. Perhaps we start to see that in the coming quarters. Expectations for earnings are about 40% less for the Mag 7 over the next year than they have been. Maybe
자,
that's
본장 개장까지 약 5분을 앞두고 있습니다. 본장 이후, 개장 이후 드리는 사인에 집중 부탁드리겠습니다. 자, 본장까지 약 5분을 앞두고 있습니다.
Underlying it is this argument that lower free cash flow is a good thing for this market.
자, 추가 하방 압력 충분히 가능성 있다고 판단되어서 지켜보면서 대응 이어나가도록 하겠습니다.
Right. Free cash flow, take out NVIDIA from the Mag 7 was down 16% year over year in the second quarter because of exactly what you're saying, that higher spend. I do think it's a concern we have to watch and make sure that that balance sheet stay strong. It's the main thing that you look at when picking a stock. So yes, we want to see them invest, but we want to see that free cash flow stay high as well. That's what the ROI is on AI, and we're not really getting a clear picture on that yet.
So well said, Victoria. Stick around with us. Much more to discuss. Victoria Fernandez there of Crossmark. A quick check on futures as we are just moments away from that opening bell, and it does look like 2 days of declines are set to reverse, higher by 0.4% for the S&P, 0.7 for the Nasdaq. As Victoria was just saying, it is the Google tide that is lifting all boats this morning, as small caps continue to lag, down by 0.25%, with the long end of the yield curve bouncing around 5%, maybe still pressuring the small cap equities. All right, coming up next on Open Interest, it is your opening bell. This is Bloomberg.
A cidade estava sitiada.
Isso, ao começo, eu não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that,
자, 본장까지 약 1분을 앞두고 있습니다. 개장 이후 사인 집중 부탁드리도록 하겠습니다. 현재 매도진입권 5계약 실시간 대응 중에 있습니다. 자, 수익권 진입하였습니다. 본장까지 약 40초 앞두고 있습니다.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business,
자, 본장
markets,
시작됩니다.
economics, tech, and climate. More than what you need to know, it's what you need to think about.
자, 본장 시작됐습니다. 자, 수익 청산 사인되도록 하겠습니다. 자, 개장 이후 급격한 하락세 나눠주면 수익 청산 사인드립니다. 수익 청산하도록 하겠습니다.
After 2 days of losses led by big tech, thank you Google, and the decision there not to have to spin off Chrome up 0.6, and the S&P also rises off the back of that. Your small caps still seeming to suffer in today's session. We have the opening bell now.
주문 청산이 완료되었습니다.
We have Pulte Group, which by the way was founded by Bill Pulte, the Federal Housing Agency Director's grandfather. He's of course not currently part of this company. It looks like you also have Lynn Martin there, the president of the New York Stock Exchange, helping to ring the bell. And over at the Nasdaq, you have eBay ringing the bell. 30 years of eBay. They went public
자, 이어서 바로 4차 진입표 대기하도록 하겠습니다. 자, 급격한 시장 상황으로 인해 캡처가 되지 않았습니다. 자, 4차 진입표 사인 드리도록 하겠습니다. 자, 바로 사인 드리도록 하겠습니다. 자, 매수 진입 사인 드립니다. 자, 매수 진입 사인 드립니다. 매수 3계약 진입 사인 드립니다. 진입가 407.00입니다. 407.00. 자, 매수 진입 사인 드립니다.
This is the thing basically lifting the entirety of the equity market this morning. It is Alphabet shares up 7.2%. Google will not have to sell its Chrome browser as part of an antitrust ruling. Analysts see that as favorable for big tech. Dan Ives saying that like a cheap suit that the government has folded. So there you go. Stocks are higher on the morning at the opening bell, and we are back with Victoria Fernandez, Chief Market Strategist at Crossmark Global Investments. And Victoria, maybe it's also notable that we're moving higher this morning, despite the fact we've had 30-year yields bumping up around 5%. What is the transmission? When do you get worried about those higher yields continuing to weigh on this equity market?
Yeah, I think typically the equity market does watch that 5% mark when we get close to that. But what we've been seeing is as yields go up and they hit some of those levels that previously has caused some concern, we've actually seen people step in and start buying, locking in some of those higher rates on the fixed income side of their portfolios, and then that brings yields back down a little bit. Now, some of the pressure we're seeing is from global bond yields. Obviously, we've seen when you look at Japan, 30 years at all-time highs, 20 years at 2-decade highs. We're seeing it in France as well and in Germany. So we're getting some pressure globally on the yield side, which doesn't make the equity market as nervous. But I do think they're going to be paying attention if we go over that 5% level and we get a Fed that maybe is not as dovish as people are anticipating based on what we get on the labor market reports this week, then I think you could see some nervousness possibly in the equity
자,
market.
이제 시장 급격한 움직임을 보여주고 있습니다. 자, 사인에 집중 부탁드리겠습니다.
You hope that you will see as the year goes on, especially for companies like small caps that have a lot of floating debt that are more sustainable or more susceptible rather to higher borrowing costs. Does that really challenge some of the rotation thesis?
It does in the sense that
자, 수익 청산 사인 드리도록 하겠습니다. 여기서 짧게 보고 수익 청산 사인 드립니다.
A lot of their debt is coming due from
수익
COVID, where they
청산
went ahead,
사인
they
드리도록
had those low
하겠습니다.
yields, they bought that debt. A lot of that is maturing at this point, and they're having to reinvest. So they need those yields to come down in order to continue to do well. Now, I will say in the short term, the small cap trend has actually moved up a little bit. It's positive relative to the Russell 1000, so that's good news. It doesn't mean it's sustainable at this point in time. They do
주문 청산이 완료되었습니다.
자, 수익 청산 사인 드리고요. 바로 이어서 5차 진입표 대기하도록 하겠습니다. 자, 5차 진입표 대기하도록 하겠습니다.
To the level that we've seen in the larger cap stocks. And so once that starts to happen, then I think you have more of a solid foundation there and you'd see more of a rotation. We just haven't seen it yet.
Victoria, when it comes to earnings, the Wall Street Journal had this really interesting story out this morning, basically saying, yes, companies are beating expectations. But if you look
자,
through
이어서
why
바로
they
진입
beat,
사인
it
드리도록
comes from
하겠습니다.
managers that have been cutting
자,
costs,
매수
boosting
진입
productivity,
사인
some of the
드립니다. 자,
uses
매수
of new
진입 사인 드리도록
technology.
하겠습니다.
How sustainable
자,
are
매수
earnings
진입
beats
사인
if they're
드립니다.
not driven by
체결되었습니다.
necessarily fundamental
확인
growth,
바랍니다.
but rather cost cuts to
40.25.
preserve
자,
margins?
매수 진입입니다.
I mean, Danny, you can only cut costs so much, right? At some point, that is no longer an option in order to help your balance sheet look better and in order to get those earnings numbers that you're striving for. So there is a limited amount of time that can be beneficial. What we have seen as well is even though there haven't been mass layoffs, we have seen quite a few companies across many different
시장 변화가 지금
industries start to
급격하게
lay off and
있습니다.
reduce some expenses there. I mean, whether
사인에
it's
집중
a
부탁드리도록
Kroger or a
하겠습니다.
Paramount, Procter & Gamble, Nike, even Alphabet. So we've seen some of these companies be able to reduce some of those costs. At some point, we have to see the revenues start to go higher, and there's going to be some concern around that, especially as we look at the consumer and we see the consumer weakening. It's all tied back to the labor market. And if labor market can stay steady, then the consumer, especially here in the U.S., will continue to spend. That should hold up earnings. But it is questionable right now as to how strong that can be going forward.
Well, we're going to get more clues on that labor market starting 10 a.m. today. JOLTS data ending the week with jobs, unemployment claims. Victoria, thank you so much for joining us this morning. Crossmark Global Investment Chief Market Strategist, Victoria Fernandez. All right, let's check in on where stocks stand at the moment. Just 5 minutes into your trading session. We're higher on the session, but as you can see there, it's actually not the best of breath. More stocks are down than are up. Nearly 300 stocks are down, 200 are up. But what is supporting us? It is the colossal Mag 7 that seems to be doing very well. It is Apple and Alphabet after that antitrust ruling that allows Google to keep Chrome, that allows them to keep paying Apple. That is what's supporting us this morning. And we have had tech in the recent 2 days also weighing on the sell. So a little bit of a turnaround. NVIDIA, I should say, still down in today's session, just 0.5% because of its weighting. It is one of the biggest decliners on that. Berkshire Hathaway, Boeing also falling in today's session. Meanwhile, if you look at the sectors that are on the move, again, you get this flavor that even though we are higher, it is not on good breath. It is the comms sector, which again includes companies like Google and Infotech, which includes companies like Apple, that is helping to lift us up. 2.8% is the gain there. I just want to point out the bottom, you'll see energy stocks here. Those are falling as the price of oil also falls, with OPEC plus a Reuters report saying that they're going to look at lifting production. So that's why you see some of those changes there. But again,
자, 이제 매수진입권 실시간 대응이 나가도록 하겠습니다.
And Google has responded
자,
to that
개장 이후
antitrust
약
ruling that I
7분이 지나고
mentioned.
있습니다. 조금 더 지켜보고 대응이 나가도록 하겠습니다.
About how these requirements will impact users and their privacy, and we're reviewing the decision closely. Bloomberg Tech co-host Ed Ledlow joins us now. So Ed, the market celebrates. How much is Alphabet celebrating off of the back of this decision?
Yeah, Alphabet internally will be celebrating the main point, which is that the court did not require a breakup and did not require Google to divest Chrome or any other Android platform property. That is the main headline. Alphabet, following the open, has settled up 7%, on track for its biggest gain since April. There is still the matter of what the judge in the case does require Google to do. And as you quite rightly point out, the main response from Google, the thing that they may even appeal, is the idea that they'll have to share search data with rivals. And when we think about rivals, DuckDuckGo, Perplexity, even OpenAI, their main argument being that there is a privacy risk. The street looking well past that, the Chrome browser being the mainstay of it. But the main second thing in the affirmative that Google's still able to do is to pay Apple around $20 billion a year to be the default search placement. They cannot have exclusive contracts that restrict distribution, but they can pay for the right to do so. So Apple's up 7%, Alphabet, sorry, is up 7%, but Apple is up also markedly as well.
Ed, can we just talk about the irony of the situation where you literally have OpenAI's rise being the thing that has saved Google from breaking up?
Yeah, the judge in the case was absolutely explicit. The thing that changed the course of events that yielded this result was the rise of generative AI. And the judge specifically noting that that has created competition. But at the end of the day, this was about search. And so, you know, the only thing that the market's paying attention to, and there's the history of several bids for Chrome from some of the AI names like Perplexity, was the idea that Chrome did not need to be divested, but data does need to be shared with rivals in the search domain. And you know, what happens next? The judge has invited all parties, the government and Alphabet, to return September 10th with codified proposals on the remedy in line with the judge's ruling. But I don't know that that's the end of the story, Danny.
Yeah, well, we look forward to you continuing to cover the story as it unfolds, and looking forward to seeing you in 1.5 hours' time on Bloomberg Tech. That is Bloomberg's Ed Ludlow. Coming up on this show, Macy's soaring, raising its annual outlook, but still warns of a more cautious consumer. We're going to take a look at the retailer. That's coming up next. You're watching Bloomberg Open Interest.
AI should be for everybody, from leaders to the working on floor. And we can save 90% of time, 50% of workforce. AI is core in centers of change. And therefore, we invest heavily to AI. Actually, we started more than 10 years ago because we think the machine in the past helped our hand and legs. Now the machine helps us in brain.
Are you betting all your money in this right now?
When the OpenAI appear, immediately I ask whole corporations study how will you bring generative AI to their job.
자, 현지 시간 길게 보고 대응 이어나가도록 하겠습니다.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Let's get you some top calls now. Some of the analyst action in focus this morning. First up, Morgan Stanley upgrades Kraft Heinz to equal weight, saying the stock's valuation now looks more reasonable ahead of its upcoming split, varying with Warren Buffett, who, by the way, yesterday said he did not think the split would help them. Next up, Bank of America downgrading Phillips 66 to neutral, seeing a challenging outlook for chemicals and natural gas. Those shares little change, though. Then you have Argus upgrading Wynn Resorts to a buy, highlighting a significant recovery in Macau and the potential for market share gain in Las Vegas. Let's turn, though, back to one of our top stories this morning with the retailers reporting earnings. Look at that huge gain in Macy's, up 20.5%. It raised its annual outlook. It reported its best comparable sales growth in 3 years, attracting all types of customers. The company's CEO telling Bloomberg's Romain Bostic that they have content for both content for both big spenders and savers. I'm pleased to say that fresh off of speaking with the company's CEO, Romain joins me now around the desk. Romain, really great interview you had with the Macy's CEO here for Bloomberg News. How does this mean their turnaround is? Is it on track? Is it complete with this type of earnings?
Well, it's certainly not complete, but I think by the share reaction, I think investors are growing a little bit more confident. Remember, Tony Spring just took over as CEO back in February of 2024, so it hasn't even been a full 2 years. There are a lot of doubts about his ability to turn around what is essentially a big legacy business, particularly with the Macy's brand itself. Remember, Bloomingdale's is also under this. They've been doing well for a while. Tony actually used to help run that company, that side of the company. Blue Mercury, another component of this business, also doing well. But we know Macy's as a Macy's, and that's been struggling. And what he's done is shut down a lot of stores. He's taken about 125 other Macy's stores, completely revamped them, tried to make the shopping experience better, make them more aesthetic, create more experiential things in them. And at least for right now, it does appear to be paying off. You're seeing that in comp sales growth. It was a big surprise this quarter. Most people were expecting a flat quarter, even a down quarter. They came in at about 1.9%. If you just X out all of the businesses that they're closing, that's good. Now, this is still a company that's in decline. It's just that decline is now slowing.
Well, trying to do a turnaround in best of times is hard, and it's certainly not the best of times. You have retailers like Macy's having to contend with changing consumer appetite and especially tariffs. What is their strategy going forward to try to make sure that they can maintain margin with some of the higher prices maybe weighing on them?
Well, they did provide some insights, the idea that they're getting about a 40 to 60 basis point hit on margin, specifically from the tariffs. While he did say that they did raise prices in some areas, he did say they're still holding price in others, though he did indicate that that could change. I think one interesting thing that he talked about was the ability for Macy's to negotiate with the suppliers. Remember, this is a behemoth of a retailer, so they do have some flexibility. They also have private label brands. These are things they make themselves. The tariff costs are much more impactful there. They said they're doing their best there to also reduce that cost. And you saw that in the most recent quarter. Expenses were lower, inventory was lower, and you saw a better product mix that actually helped to boost sales in particular categories like women's apparel, which they have been lagging in.
What does all of this say then just generally about the consumer at this moment and their willingness to spend and maybe eat some of the price increases?
Well, he talked a lot in my interview about the consumer being more surgical, more choiceful. This also came up on the conference call, the idea that people are sort of making choices about what to spend. But in the quote that you used, that was a key quote that he used when I spoke to him in the interview. This idea that they offer something for everybody. They offer something for the higher end consumer and something for the lower end consumer. And he thinks that that could be the strength of Macy's. And maybe that's where they are. Because remember, this has been a story about identity. I mean, what is Macy's? What is a department store, particularly in this environment? He seems to think he's found a way, and at least for today, with that 20% pop in the shares, investors seem to be somewhat pleased.
Yeah, maybe a clear kind of market share grab he's trying to undergo. Romaine, thank you so much for bringing us that interview. That is Bloomberg's Romaine Bostick, and we're going to continue the retail conversation. Lisa Abramovitz will be speaking with Gap CEO Richard Dixon in about 24 hours' time, so don't miss that conversation tomorrow. Now, coming up, Figma posts results today after a record-breaking IPO. We'll preview what to expect and what it means for this IPO market. All of that coming up next. You're watching Bloomberg Open Interest.
up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Alberta, Canada, and this is Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Bringing you up-to-the-minute global news whenever and wherever it happens.
자, 여기서 추가 매도 사인드리도록 하겠습니다. 추가 매수 사인드리도록 하겠습니다. 추가 매수 사인드립니다.
It's Jobs Day, and Bloomberg has the report under surveillance.
This is going to get Wall Street's attention.
They're not going out and hiring a ton, but they're also not firing. So basically, you have a frozen labor market.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminals.
그러니까 04.50입니다. 04.50.
And that really is the key question.
추가 매수 사인드립니다. 이제 수익권 진입하였고요.
on Bloomberg. Context
까지 천천히 대응 이어나가도록 하겠습니다.
20 minutes into your trading day, you're watching Bloomberg Open Interest, a check on these markets as we head further into the session, and it's green for the first time in 2 days. Being led by tech, the Nasdaq outperforms up 0.6%.
자, 이어서 바로 수익 청산 사인 드리도록 하겠습니다. 자, 수익 청산 사인 드립니다. 수익 청산. 자, 약 140만 원. 수익 청산 사인 드립니다.
They were moving higher this morning. At one point, that 30-year yield was just 1 basis point away from 5%. Again, we back off of that and give in to gains. So if you look at what the tech names themselves are doing,
주문 청산이 완료되었습니다.
again after that ruling that they don't have to spin off Chrome, that they
자,
can
이어서 바로
continue to
6차
pay Apple for
진입뷰
using Chrome. So Apple shares up
대기하도록 하겠습니다.
2.6%.
6차 진입뷰
Nvidia
대기하도록
just now
하겠습니다.
flipping into the green. It was negative to start the
자,
session. So
중요
all of the
지표
Mag 7
중요
more
지표
or
중
less
하나인
having a
졸트
pretty good day.
부인은
As is
발표까지 약
Macy's.
10분
Again,
앞두고
we're just talking to
있습니다.
Romain Bostic about this. Look at that gain, 20%, having its best quarter in 3 years as they try to engineer that turnaround and as it picks up steam. Dollar Tree stores, though, to the downside, a lackluster guide for
자,
this
진입 사인 드리도록 하겠습니다. 자, 매수 진입 사인 드립니다.
체결되었습니다.
자, 매수 진입
확인
진입가
바랍니다.
429.00입니다. 429.00. 자, 매수 진입 사인 드립니다.
Anticipated earnings and the most anticipated public debut of this year. The software company Figma will post results after the bell. This is its first set of results since its blockbuster IPO, which happened just 4 months
자,
ago.
금요일 중요 지표 중 하나인 졸트 부인 인원까지
We're joined by Bloomberg's Bailey Lipschultz, who follows
현재
IPOs
진입권 대응
for us. So
이어가도록
Bailey, after
하겠습니다.
a
자,
breakneck
고용
run
관련
for
지표고요.
Figma shares, what are the expectations for earnings?
No one really knows, Danny. And this is a company, it's still
지표에
essentially
따라
doubled from its
연준의
IPO price, though it
금리나
was down about 40%
여러
call it from
가지
that debut close. We've seen analysts baking in or talking up
시장에
expectations for growth next year to slow down to about 20%.
반영될 수
This
있습니다.
coming after the company itself had predicted this year they would grow 30 to 35%. The big thing, though, Danny, is when you're a company
자,
that's
그리고
really
10시에
public and reporting for the
진행되었던
first
무살렘
time, you have
총재
to beat expectations and you have to raise
연설을
expectations.
살펴보게 되면요.
These are management teams that
현재
meet with analysts
금리가
before going public. You kind of talk down
경제
your
상황에
first earnings
적절하다
report. If you miss, you're in the
라고
penalty box.
말한
So it's
바가
gonna be
있고요.
closely
노동시장과
watched.
인플레이션
But the big thing
사이에서
is
균형 잡힌 접근이 필요하다. 그리고 9월 금리 인하에 대해서는 더 많은 데이터를 보고 결정하겠다 라고 말한 바가 있습니다. 자, 또한 노동시장이 점차 둔화될 것으로 보이며 인플레이션은 여전히 목표치보다 높은 수준에 머무를 위험이 있다 라고 밝힌 사실이 있습니다. 자, 현재 매수 진입권 실시간 대응 중에 있습니다. 잠시 후 7분 뒤에 발표될 7월 졸트 부인연까지
concerns around AI really
현재
eating the lunch of
진입권
most
대응해 나가도록
software
하겠습니다.
companies. But the big thing is, when you see these big rallies, we saw Circle up 3, 4, 5 times and still holding on to those gains after some early investors were able to sell. With Figma, what are real long-term investors looking for? If we do see steady weakness, will we see some of those IPO buyers step up in size, or is it still a bit rich from a valuation perspective?
Can we just talk about also how important this period in particular is for this IPO market? Because you had a first half where everybody was saying IPOs are coming back. You've covered a lot of them. They've really been confined to maybe more crypto and high-flying tech type names. You have Gemini, you have Klarna heading off on their road shows. Is this the period to really gauge whether the IPO market is truly coming back in force?
Without a doubt. And this is going to be a week next week where we'll see likely the largest volume since ARM went public, but more kind of important is that this is the first real test since 2021 where we've seen 6 or 7 companies going to be on the road at the same time. You have a range of companies, as you mentioned, Klarna, Via launching their process today. You have some insurance companies on the road. So kind of a broad group of companies courting first-time IPO buyers. It hasn't been like this really, again, since 2021. So it'll be interesting how they price, how they trade in the aftermarket, and if we're going to see, when we see 3 or 4 deals pricing in one day, how we can see investors kind of dividing their attention.
I was going to say, after looking at kind of the success of Figma, as you say, doubling and Circle and that sort of thing, how are these companies thinking about their pricing strategies for IPOs?
We've seen a lot go back to kind of the bread and butter, where you start out with a lower valuation, you start out with a smaller number on that cover when you launch your process. You get some strong feedback when you're on the road. Then we see companies refile to either increase the number of shares or ramp up the actual price for the first-time share sale, and then ultimately, in a perfect scenario, pricing above that. We saw that play out with the last handful. It's going to be interesting to see if this is a strategy that Gemini implements. We saw Klarna, again, looking to raise more than $1.2 billion. That's a pretty big amount of money for that company to raise, so it's going to be interesting to see how they navigate that.
Some more tests, and again, we get one of them in the form of Figma earnings after the bell today. Bailey, thank you so much for helping set it up for us. That is Bloomberg's Bailey Lipschultz. All right, about 25 minutes into your trading day, and now we have all the major indices in the green. You'll recall the Russell 2000 started out in the red, helping
자,
us
시장의
with the
중요
fact that we're
지표가
actually
이렇게
seeing
예정되어
bond
있을
yields
때는
start to
차익 실현
decline.
물량이라든지
In the
회피
U.S. session,
물량
we flipped from losses to gains as we are
나와줄 수
buying. That's
있습니다.
helping to lift up all equities this morning. Half a
즉슨
percent is the
매도세가
gain
나와줄 수
for the
있지만
Nasdaq. Again, it is the Google of the world, the Alphabet, the Apples, rather
데이터
helping lift
나오고
up the
이후에
entirety of this section,
방향성이
considering having that
중요하기 때문에
antitrust ruling that
약
finds that they do
4분 뒤
not have
발표될
to spin off Google Chrome.
졸특
Well, coming up
분위기는
in the next hour, BlackRock strategist Gargi Chaudhry says that she sees investor sentiment
데이터 발표
has
후
remained
방향성
robust
체크 후에
despite some of that ongoing uncertainty. Plus, Empower
주가
CEO on
및
alternative
청산
assets coming to
시작되도록 하겠습니다.
401ks, and we talk about the state of the consumer as retailers like Macy's warn of a potential pullback this holiday season, and Dollar Tree shares sink on a disappointing guide for the current quarter. All of that coming up on the next hour of Bloomberg Open Interest.
자, 그리고 지표 발표 전 빠르게 잠깐 이제 트럼프 평행 코멘트 확인하고 트레이딩에 나가도록 하겠습니다. 자, 트럼프 행정부가 유럽 국가들에게 러시아산 원유를 구매를 중단하고 이를 구매하는 국가에 대한 미국의 제재에 동참할 것을 촉구하고 있다고 밝힌 바가 있습니다. 자, 데이터 발표까지 약 2분을 앞두고 있습니다. 자, 발표 드리는 사인에 집중 부탁드리겠습니다. 졸투구 인형과 7월 제조업 수주 두 가지 발표됩니다.
The real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course. Now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have for free all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning.
자, 지표 발표 나옵니다. 데이터 나옵니다.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
자, 일단 7일, 8일 예상보다 좀 부진한 결과가 나왔고요. 자, 시장에 어떤 영향을 줄지는 좀 지켜보고 대응 이어나가도록 하겠습니다. 자, 이전치 7437에서 좀 하향된 1237 발표가 되었습니다. 자, 고용 데이터가 좀 안 좋게 나오면서 금리나 기대감은 좀 더 올라갈 수 있는 점 참고 부탁드리겠습니다.
I'm Deborah Rodriguez. We're expecting to hear from some of Jeffrey Epstein's accusers at a news conference on Capitol Hill this hour. Their appearances come a day after a House committee released thousands of pages of Justice Department documents related to the disgraced financier. Correspondent Scott McFarlane.
You're going to have later today both parties supporting this effort to push out a requirement the Department of Justice release more records, but those parties may have different motives. Nevertheless, there's a coalition that is forming. We'll see if it's big enough to force any releases.
The records include a missing minute of surveillance video from the jail where Epstein died. In Beijing, soldiers in pressed uniforms marched in lockstep. Helicopters flew overhead, forming the number 8 and O in honor of the 80th anniversary of the end of World War II, as President Xi Jinping and 2 other strong men watched on the sidelines. Correspondent Anna Karin reports.
This spectacle was more than just commemorating the war dead. It was an opportunity for Xi to take center stage, flanked by his powerful allies and neighbors, Russia's President Vladimir Putin and North Korean leader Kim Jong-un. And the message was undeniable. Strength in solidarity and a challenge to the U.S.-dominated world order.
President Trump says the U.S. attacked a boat full of drugs in the Caribbean, killing 11 people. CBS's Charlie D'Agata from the Pentagon.
President Donald Trump released video on his Truth Social account, which he said showed the U.S. military conducting a strike in international waters on Tuesday. The target, he said, was a boat filled with members of the designated terrorist organization TDA, or Tren de Aragua, who were allegedly transporting illegal drugs from Venezuela to the U.S.
A Houston man is charged with murder in the death of a boy who police say was playing a game of ding-dong ditch with his cousin when he was shot in the back. Police say the suspect was waiting in the shadows after the 2 children knocked on his door and ran. Harris County District Attorney Sean Tier.
No reasonable person would be in fear for their life based on the behavior of 2 11-year-old kids.
Gonzalo Leon Jr. is due in court today for a bond hearing. No one's won the Powerball lottery since May, and it's pushed tonight's prize up to $1.3 billion. People are snatching up tickets from San Francisco to New York City, and some have big plans for their potential winnings.
Help out family, help out friends, stuff like that.
Take care of my family, take care of my neighborhood, help. What you going to do with all that money?
Alphabet stock up 8%, Dow's down 183. This is CBS News.
자, 현재 수익권 진입하였습니다. 자, 수익 청산 사인 드리도록 하겠습니다. 자, 수익 청산 사인 드립니다. 자, 2개 아끼는 약 50만원에서 수익 청산 사인 드립니다.
주문 청산이 완료되었습니다.
청산 사인 드렸습니다. 자, 이어서 바로 7차 진입뷰 사인 드리도록 하겠습니다. 7차 진입뷰 진입 사인 드리도록 하겠습니다. 자, 다시 한번 매수 진입 사인 드립니다. 자, 매수 진입 사인 드립니다. 진입가
체결되었습니다. 확인 바랍니다.
441.25입니다.
The SS Terra Nova carried
매수
Captain
진입
Robert Scott and his team
441.25.
to their fatal expedition to the South Pole in 1910. The ship was used commercially until 1943 when it sank off Greenland's
자,
south
매수
coast.
진입 사인
Now, Leighton
드렸습니다.
Raleigh and his fellow researchers
441.25입니다.
at Rev Ocean have conducted the first visual survey of the shipwreck. They got great video of the ship's wheel.
When you think of the people who have stood there, maneuvered their Terra Nova through ice and various things like Captain Scott, it was like, wow.
The shipwreck has become a colorful reef. Michael Wallace, CBS News.
A jury in L.A. has found Cardi B not liable in a $24 million civil lawsuit filed by a Beverly Hills security guard who accused the rapper of assaulting her with her spiky fingernail extensions outside a doctor's office.
Even if I'm in my deathbed, I swear to God, I will say it in my deathbed. I did not touch that woman.
Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube as well. Head over to youtube.com and search Bloomberg Live Radio. That's where you'll find us. Scarlett Fu, Paul Sweeney, live with you here today. Coming up, we're going to check in with Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist, get his thoughts on the Fed here and what's the next move. Margie Patel, Senior Portfolio Manager at Allspring Global Investments up there in Boston. She'll give us her market call. Randall Williams, Bloomberg Business of Sports reporter. I sense a theme here, Scarlett. Business of sports.
I'm forcing this into the rundown every day.
I love it. This is awesome. There's so much to talk about all the time. And it's big money, too. So we'll check in with Randall and see what he's got for us. Mark Gurman, walking the hallways here in New York. He's based in our LA bureau. He breaks everything on Apple. So we'll get his latest thoughts on what's happening with Apple. So we got a lot coming up in the next couple of hours. Let's kick it off as we do. Mr. John Tucker of Bloomberg.
All right, this Bloomberg Business Flash, guys, brought to you by IBKR Financial Advisors. Switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest. Learn more at ibkr.com/RIA. We're data dependent, so let's start there. This is the job opening labor turnover survey. Coming in lighter than expected, an annual rate of 7.181 million. The expectation was for higher, that close to 7.4 million. Now, having said all that, Mike McKee was in
수익 청산 사인드립니다. 자, 일단 진입권 수익 청산 사인드립니다. 수익 청산하도록 하겠습니다. 자, 매수 진입권 두 계약 약 70만 원에서 수익 청산 사인드립니다.
주문 청산이 완료되었습니다.
자, 8차 진입뷰 이어서 바로 대기하도록 하겠습니다.
Shares right now
자, 빠르게 사인 드리도록 하겠습니다.
8.3% higher Apple shares. They're up 2.3%.
자, 단기 조정 가능성 있다고 판단되어서
S&P 500 that was down somewhere around 8%. Profit for the
매도 진입 사인 드리도록 하겠습니다.
As the lift from price hikes kind of peters out. Earnings outlook this quarter points to a tougher second half of the year. They have Macy's
체결되었습니다. 확인 바랍니다.
8.50입니다. 자, 438.50. 자, 매도 진입 사인 드립니다.
Overall, the S&P 500 up 23 points. That's a rise of 0.4% at 6439. The Dow Jones Industrial Average down 182 points, and the tech-heavy Nasdaq 100 up 177 points. That is up 0.75%.
자, 매도 진입 이어나가도록
the
하겠습니다.
30-year, it was brushing against 5% earlier. Right now, 5 basis points lower. This is at 491. A lot of corporate issuance this week as well. We check the markets for you all day long. Right here on Bloomberg Radio, I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul. Day 2 of Scarlett.
Exactly. It gets even better.
Are we going to keep counting down like every day?
Yeah, John, I think we should.
Oh, yeah.
Absolutely. Day 327.
It'll be like day 28 of Scarlett Fu.
John Tucker, thank you so much. We appreciate that. As John was just saying, red and green on the screen. But let's take a look at some the stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu. And we're joined by Bloomberg's Christine Aquino. Christine, what are you looking at?
We got to talk about Google, Paul.
Yep.
I mean, yeah, top story today.
That was about as good of a ruling as I think it could have been.
Pretty much, yeah. Yeah, so, and the shares are reflecting that as well. So Alphabet, of course, the parent company of Google, ticker GOOGL. Those shares are extending gains now, up nearly 9%. So that opened around 7% higher and just keeps going. And it is specifically, as Paul mentioned, because of this favorable ruling in its antitrust case, which essentially allowed the company to avoid a forced sale of its Chrome browser. So that was the most important thing hanging in the balance there. So interestingly, so the judge last year, Judge Amit Mehta, actually ruled that Google illegally monopolized the search market through exclusive deals. But then in a judgment on Tuesday, he wrote that the emergence of Gen AI, changed the course of this case. Very interesting line.
So it sounds like he listened to Google's defense.
Exactly.
And was like, oh, okay, yeah, you're right.
Yeah, so it seemed like it was definitely worth it for Alphabet to appeal that case. And no, the ruling, though, will still have Alphabet make some concessions, like including sharing their online search data with rivals and ending exclusive contracts for distribution. But the big prize was avoiding the sale of Chrome, for sure.
And Larry Page and Sergey Brin, the co-founders, each going to be making, on paper, $15 billion today.
Not bad.
With the surge in the
Not
stock
bad.
price. So they are number 5 and 6 on the rich go top earners, wealth people out there. So there you go. All right, what do you got?
Looking at Dollar Tree as well, John Tucker was talking about this earlier today, so let's dig into it. So those shares, ticker DLT, are extending declines, so down just over 8% at the moment. So, you know, John mentioned it was supposed to be a good quarter. They reported a beat and raise quarter, but the kicker was the second quarter EPS. It was a beat of 34 cents, but that also included a 20-cent positive impact from the timing of inventory mark-on and tariffs, and the company expects that to reverse in the third quarter. Now, the other thing that analysts are looking at here not so positively is the fact that their comp sales guidance for the full year is at 4% to 6%, but then if you take into account that they already grew more than 5% in the first quarter and more than 6% in the second quarter, that actually implies a little bit of a deceleration in the back half of the year. So Bernstein analysts saying that they're just not convinced that momentum in that we saw in the second quarter is sustainable. So we'll see.
Campbell Soup.
Campbell Soup.
All right, here's my Campbell Soup go-to. If anybody's got a go-to, let me know. Manhattan clam chowder.
주문 청산이 완료되었습니다.
I really like that one over New England clam chowder, which I feel
수익
is
청산 사인드렸습니다. 두 개가 100만 원.
See, that's my go-to. I'm not going to Campbell's for soup, but yes, Campbell's ticker CPB. Those shares are up more than 4%, and you know the focus here is, of course, second quarter adjusted EPS at 62 cents, beating estimates for 56 cents. And according to CEO Mick Bakehausen, that's hysterical. Mick Bakehausen.
다시 한번 매도진입 사인 드리도록 하겠습니다. 다시 한번 매도진입 사인 드리도록
As John Tucker
하겠습니다.
said, it is all about the Milanos,
자, 매도
specifically
두
the
개야.
white chocolate
체결되었습니다.
and the
확인
launches that
바랍니다.
they've done for that.
30.50입니다.
So that's it. It did adjust its
30.50.
earnings outlook for the year, and which missed estimates because of increased cost pressures linked to
자,
tariffs.
매도진입
But
사인
Milano cookies
드렸습니다.
saved the day for
자,
Campbell's.
현재
You have
진입권
inspired
천천히
me. I
목표
am going
수준까지
upstairs right
대응
now.
이어나가도록
But we don't have the
하겠습니다.
Milano white chocolate in
Well, I'm gonna
upstairs.
look.
Sorry to pop.
Yes.
Your
Bring
bubble.
enough for all of us, okay?
All right, Christine, thank you very much. Christina Aquino, Managing Editor for Markets Live, Bloomberg News, bringing us the stuff there. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5 minutes audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Let's check in with Ira Jersey here. Why? Because he's in charge of like the bond market, the treasury market. And I'm told by Lisa Bromwitz that's important. So we're supposed to pay attention to that market.
We think.
I try to avoid it. I like the stock market, but we're told it's important. Ira Jersey, Bloomberg Intelligence Chief U.S. Market Strategist. He's down there in Princeton, safely ensconced. We're not busting him out of there anytime soon. Ira, what are you looking at here today? The JOLTS data came out. Do you care? What are you looking at here to get a sense of where your Federal Reserve is going to go next?
Well, Paul, the market certainly cares about the JOLTS report. So we were, yields were slightly higher prior to the report. The JOLTS report came in with significantly lower job openings, and now you've seen a turnaround and a pretty decent rally, especially in that long end of the yield curve, which has really been taking it on the chin over the last couple of weeks. So, so clearly there is a resurgent, fear that maybe the job market is starting to turn a little bit more aggressively than some people had hoped. I think that the Federal Reserve is going to focus on jobs. I think that that's really where their head's at the moment. You even had Chris Waller, who is, I don't want to say a front runner, but certainly in the mix potentially for the next Federal Reserve chair. He mentioned this morning that he thinks that they should cut interest rates before the job market starts to tank. Now, that being said, that's not a huge surprise. He dissented at the last meeting and said we should have been cutting interest rates already. So that's not really, new information from him. But I think that there's more and more people on the committee that are kind of going to start leaning that way if we continue to get these weak job kind of numbers.
Okay, so the catalyst for the turnaround in bond yields, at least in the U.S., was this jobs report, which really underscores the idea that the Fed will move forward. John Tucker mentioned earlier that there's a lot of corporate bond issuance this week, particularly yesterday. How much pressure did that put on the Treasury market?
Yeah, well, going into this, so what happens when corporations issue bonds, and this is why, Paul, you're an equity analyst, you have to pay attention to the bond market. Weighted average cost of capital matters to companies. And so firms that are issuing bonds today, they hedged those their issuance a week ago, 2 weeks ago, within the recent past. So that could be one of the reasons why you saw 10-year yields and 30-year yields sell off a little bit and have a little bit of pressure, just people hedging their bets. Those get taken off once those bonds settle because you don't need that hedge anymore now that you've issued the bonds that you issued. So that's what we call rate locking, and the unwind of rate locks will, sometimes, not always, but sometimes when you have these heavy issuance weeks like this week, you can wind up seeing a little bit of a reversal of the sell-off going into that heavy supply in the corporate world.
What's the next big data point for the bond market? We're going to get I guess the jobs number on Friday. That's the big one, right?
Oh yeah, it's always jobs, right? Jobs are front and center. I think one of the big thing with jobs is, yes, we'll be looking at the non-farm payroll numbers, and certainly there'll be a lot of market volatility around that. But I'm going to look very closely at the wage numbers, because wages in the services sector, which accounts for about 70% of employment in the U.S., that's been pretty sticky, and that's one of the reasons why you've seen a decent increase, continued increase in consumer spending. Is that the people who have jobs, even if there's less growth of jobs, the people who have jobs get decent raises, they're usually able to spend that money on additional services or on goods, and that's why a little bit of increase in goods prices hasn't really affected consumption yet. But if those numbers start to moderate and businesses don't give raises the way that they have been the last few years, that could be a really bad sign for the economy going forward.
All right, Ira. Thank you so much. Appreciate that. Ira Jersey, Chief U.S. Interest Rate Strategist, Bloomberg Intelligence. Again, down there in Princeton, he forgot where the train is from Princeton to New York. We're trying to.
When was the last time he was in New York? Let's get him up here.
I don't know. It's just, he comes when, when he's got an audience, that kind of thing. When his people allow him to come up to New York. So, but that's where a lot of our good BI folks are down there in our Princeton office. So appreciate that. S&P 500 up 17. The Dow minus 200. Let's call it. That's 0.4%. The Nasdaq's up 180, up 0.8%. So no real direction out there. WTI crude oil, that's down $1.50. This is Bloomberg.
자, 여기서 추가 매도 사인 드리도록 하겠습니다. 여기서 추가 매도 사인 드립니다. 추가 매도 사인 드리도록 하겠습니다.
체결되었습니다. 확인 바랍니다.
자, 지니까 416.38입니다. 자, 실시간 대응 이어나가도록 하겠습니다.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. And we're being brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with a minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Right now, the major stock averages, they are mixed. The S&P 500, 24 points higher. That's a rise of 0.4%. 64.39 on the index. The Dow Jones Industrial Average down 130 points. The NASDAQ 100 up 165 points. That is a rise of 0.7%. Among the economic data we got at the top of the hour, maybe evidence the job market is turning. Job openings fell in July to the lowest in 10 months. So this adds to the other data that show gradually diminishing appetite for workers. You have heightened policy uncertainty, and that's all pushing rates lower right now. The 30-year, which brushed by 5% earlier, right now 4.90, so that is down about 6 basis points right now. Retailers continue to point to sales momentum from U.S. shoppers, even in the face of tariffs and inflation. Macy's, for example, raising its annual outlook. They reported the best comparable sales growth in 3 years. They own Bloomingdale's and Blue Mercury. Shares of Macy's right now, look at this, up 18.4%. And of course, Google parent Alphabet, best performing stock in the S&P 500 right now. It's up close to 8%. Judge ruling against the government's proposals to break up Google, including a forced sale of Chrome. They can also maintain their relationship with Apple. Alphabet and Apple shares higher as a result of that. Alphabet up 7.5%. Apple shares right now up 3.25%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Paul.
All right, JT, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. All right, I mean, S&P 500, it's up like 9.5% this year. The NASDAQ's up a little bit more than 11%. So to use the old poker analogy, do you keep your chips on the table? Do you press your bets? Do you take some chips off the table? I don't know. Let's ask somebody who does this for a living. Margie Patel, Senior Portfolio Manager for Allspring Global Investments up there in Boston. Margie, it's been a pretty darn good year. Now we come back after Labor Day. It's time to maybe take another look at things here. What are you doing for the remainder of this year?
I think it's going to be more of the same. I think we're going to see relatively modest growth in the GDP, but corporations have shown themselves over the last several quarters to be very good at maintaining profit margins, increasing their earnings. So I think we're going to continue to see earnings expand at, say, 10 to 12% over the next 2 quarters for the rest of the year, even if economic growth is pretty modest, 1.5%, 2%. We happen to get a 3% quarter just now. So I think it's more of the same and still concentrated in those sectors that have higher growth. A lot of the other sectors, the other stocks, I think are just going to be sort of flatlining.
Margie, what have we learned from the companies that have reported about how they're managing all the uncertainty, especially when it comes to tariffs and figuring out their pricing, figuring out how to come up with a forecast that can survive various scenarios?
Well, it's still, the whole tariff thing is still somewhat uncertain. We still don't know exactly how companies are going to react and how it'll be reflected. But I think bottom line, what we've seen so far is, again, companies have great flexibility in getting pricing power, and that's very important to maintaining their margins. So even if they do get more increases into their
현재지권 조금 더 지켜보고 예상치 이탈 시에는 청산 사인 드리도록 하겠습니다. 조금 더 지켜보도록 하겠습니다.
It's a minor side issue, but it isn't going to affect the overall growth of those sectors like tech, like industrials that have really strong fundamentals.
So, Margie, it seems like, I guess the markets put the threat of tariffs as it relates to maybe slower economic growth, maybe higher inflation. It seems like the markets kind of put those concerns in the rearview mirror. Is that maybe a little premature? How do you think about that?
No, I think one, it reflects the fact that we really don't know how that's actually going to fall out into real growth. And on the other hand, what's somewhat offsetting the possible negative impacts of tariffs is a very, very favorable tax treatment for capital expenditures, the encouragement of companies to reshore, nearshore their production. And I think those are actually more important positives plus pricing power than the negatives that we may get from tariffs. So I think, as I said, we're in a slow growth economy, but it's still very satisfactory for companies to produce growth in, say, close to double-digit levels. That's a pretty attractive backdrop, particularly when the Fed is somewhere between neutral to realizing they need to cut short rates. So that's pretty favorable, really.
Margie, John Tucker was just telling us earlier about how Alphabet dodged this Chrome sale, and it's kind of a green light for the stock. Now at a record high, up 7.5% to $227. Does this give the Mag 7 a new momentum, a new leg up in terms of a go-ahead to investors to continue plowing money into the big cap tech names?
Yes, I think so. Particularly, Google was one of the laggards, so actually now they've really more or less caught up. And I think when people looked at the second quarter earnings, they really wanted to see what about their capital expenditures? Are they really committed to artificial intelligence, to the data centers? Because that's really what's been driving a lot of the demand in the tech side. And we got an affirmation across the board from those companies. A favorable ruling by the courts, I think, is really positive for the whole markets to say we don't have a court that's very negative to U.S. companies. So I think it says that they should continue to outpace the rest of the market because they simply have the demand. And I think second quarter earnings, their CapEx showed that.
All right, Margie, really appreciate your joining us today. Margie Patel, Senior Portfolio Manager at Allspring Global Investments, joining us from Boston. I want to switch gears here now and move on to something that's going to be happening at Bloomberg tomorrow. It is the Power Players Summit, where we are gathering leaders from inside locker rooms to those in the boardrooms to talk about the business of sports. So, of course, we need to bring in one of the big players in that space, Randall Williams. He is Bloomberg's U.S. sports business reporter who is going to be moderating a couple of panels, right?
Just one. I'll be talking to the WNBA's executive director, Terry Jackson, alongside Sylvia Fowles, who is a future Naismith Basketball Hall of Fame inductee.
All right, so fantastic. And I'm so glad you bring up the WNBA because you recently wrote a story about how Nike's WNBA stars are actually outshining their male counterparts. I mean, this is Nike, Air Jordan. So you think Nike is synonymous with the NBA, but the WNBA players are actually delivering more for Nike.
Yeah, I think the women are winning in two different areas right now. Number one, on the court, outside of the Kobe 6, Sabrina Ionescu's shoe is the most worn shoe in both the NBA and WNBA. And then culturally, as I walked around Indianapolis at WNBA All-Star Weekend, Asia Wilson's shoe was the most worn shoe that I've seen. And that's without Caitlin Clark's shoe yet. It was supposed to drop this holiday season. Now it's scheduled probably right before next year's WNBA season, assuming that it starts on time.
Talk to us about the WNBA. I mean, we've been waiting for this thing to pop for like, I don't know, at least 10 years.
Sure.
But boy, it has popped.
Yeah.
Put it into perspective what's happening with the WNBA.
So let's talk pre-Caitlin Clark. I think the WNBA was on a growth trajectory before Caitlin Clark arrived. And it's not just her, of course. We have Angel Reese, we have Cameron Brink, and so many more after Juju Watkins. But when Caitlin Clark arrived, that was essentially a tidal wave. It was a growing wave turned to a tidal wave, and now you see this tremendous popularity. They broke their attendance record 2 weeks ago, and so now you have all these investors and rising valuations, and of course the players want to be paid more. So that's what I'll be asking Terry about tomorrow.
What about expansion of the league? Because in its prior incarnation, the WNBA expanded really quickly and then kind of ran into trouble. And they've been a lot more thoughtful and careful this time around, but there is demand underpinning the game and the players in a way that we haven't seen in a while.
Yeah, I think it was in the summer they announced that they were going to be expanding to 18 teams, 3 new franchises in Detroit, Philadelphia, and in Cleveland. That netted $750 million for each expansion fee. It's a lot of money. And so we have 18 teams. I assume that there will be a 19th in Houston because WNBA Commissioner Kathy Engelbert has spoken to that, and she specifically called out Houston. The Sun are for sale. They could be moving to Boston. They might stay in Connecticut. We'll have to see. But the league is on a tremendous, tremendous path right now.
I followed professional sports, the economics of professional sports for a long time. It's all about broadcasting rights fees. That is the economic driver here. The women, one could argue, given their popularity, should be paid multiples of what they're being paid today. That's going to be driven by, I think, if history is a lesson, broadcasting rights fees or just media rights fees.
Sure.
I'm not sure how you
no,
guys
you have it right.
So where are we on that?
Well, the WNBA just agreed to a new media rights deal. It was a $2.2 billion deal annually. No, excuse me, $200 million annually, $2.2 billion total. And with that in mind, of course, the players are sitting there looking at that number and they're like, yeah, if you're going to be, expanding the revenue for the league, then we want to be a part of that. There is a disagreement at the negotiating table with collective bargaining right now as to both sides coming to terms as to what the growth in salaries should look like. But hopefully they come to terms soon, because otherwise, we could be starting the season a little bit later.
I'm so glad you bring up media rights, because there was a story in the Journal the other day about the NFL criticizing Nielsen's measurements, of course, as a new NFL season begins. I mean, if you look at the top performing shows on any given week, starting in September, the NFL is always at the top,
Sure,
right?
of course.
So what is the accusation here that the NFL is lobbying against Nielsen?
They don't really agree with the metrics. They think that their numbers are larger. That's essentially what's happening here. And what I find to be hilarious is exactly what you just said. At the end of every year, if you're looking at, what were the most 100 watched telecasts, the NFL normally occupies anywhere between 65 to 75, sometimes 80 of those broadcasts, depending on election year and things like that. So for them to come back and be like, look, I know that we have 80%, 60%, 70%.
We wanted it at 95%.
Your numbers still aren't right. We should have more of those slots. And in some regard, considering that the Super Bowl was 40-6, and yet it was the most watched Super Bowl of all time, at some point, they might be right. They might be right. And I think we'll have to see what, this upcoming season ratings will pan out to be. But it's an interesting bargaining tool. The league's media rights aren't up for a couple of years, but when they do go back to the table, they want to be in the strongest position, and this is part of that.
I know on the panel tomorrow, part of the conference is Derek Sprague, the CEO of the PGA of America. Very simply, when are the PGA and the Live Tours going to get back together? Does anybody have an idea there?
Wouldn't you like to know? I have no idea. I don't think Derek has any idea. I don't think the players have any idea. Honestly, I don't think the PGA Tour and Live know if they're going to get back together anytime
Is it just
soon.
like a very uncomfortable stalemate right now?
I think that it's a complicated deal. It's a complicated merger, and it's a cultural shift in golf on all facets. It's a huge business, of course, but also you're changing the nature of the sport from top to bottom. And so this was announced, 2 years ago, and yet we haven't heard any progress yet. We'll see what Derek says tomorrow.
Yeah. I mean, again, this is a great lineup. And just also, there's going to be a live taping of The Deal with Alex Rodriguez and Jason Kelly. They're going to be speaking with Justin Tuck, Managing Director of Private Wealth Management, two-time Super Bowl champion with
the New York Giants.
The New York Giants. So that's pretty cool, too. So that's it. This is an awesome conference tomorrow. You guys are going to be involved in that, and that's tomorrow. So the business of sport. Randall, thank you so much for joining us. Really appreciate it. Randall Williams, U.S. sports business reporter at Bloomberg News, and we're going to be doing a lot more of this.
자, 손절하고 재진입하도록
The numbers
하겠습니다.
are just so
현재 건
huge
손절 사인드립니다.
Mm-hmm.
in terms of the
손절하겠습니다.
economics.
And the players, they're getting bigger and bigger, right? You
yep.
have all investing firms getting in on it.
Yep.
Private equity has taken to it completely. So
주문
the money
청산이
amounts are getting
완료되었습니다.
larger, and it's increasingly a part of people's
손절후
portfolios.
I think we're going to look back on the
바로
WNBA and say they
대기하도록
got paid
하겠습니다.
that little.
I hope we do it soon.
I think that's going to be very soon. I mean, because the popularity is just surging. So, all right, we're going to have more coming up. This is Bloomberg. Good morning.
자, 스위칭에서 매수 진입 사인 드리도록 하겠습니다. 자, 매수 진입 5개 약 사인 드립니다. 자, 매수 진입 사인 드립니다.
체결되었습니다. 확인 바랍니다.
476.50입니다. 자, 매수 진입 사인 드렸습니다. 매수 진입 대응 이어 나가도록 하겠습니다. 끊어가도록 하겠습니다. 자, 수익 청산 후에 제재님 사인 드리도록 하겠습니다. 자, 수익 청산 사인 드립니다.
주문 청산이 완료되었습니다.
자, 이어서 바로 11차 진입뷰 대기하도록 하겠습니다. 자, 매도 진입 사인 드리겠습니다. 자, 매도 진입 5개야. 진입 사인 드립니다.
체결되었습니다.
자,
확인 바랍니다.
474.25입니다. 474.25. 자, 매도 진입 사인 드립니다. 자, 실시간 내용 이어나가도록 하겠습니다. 자, 매도 진입 사인 드렸습니다.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Right now, just 3 of the 11 major industry groups in the S&P 500 higher. Communication services, that is in the lead of the 11 major industry groups. And of course, that's home to Alphabet, parent of Google. The best performing stock in the S&P 500 right now, up just about 8.3%. This comes after the antitrust ruling, not as severe as feared. Google is going to be required to share online search data with rivals, but avoiding the harsher penalties, including any forced sale of Chrome. Dollar Tree shares falling over 9%. The retailer's second quarter report underwhelming the street. Macy's shares just the opposite there. They're up over 20%. At the department store chain reporting adjusted earnings per share for the second quarter. They beat estimates. They also boosted the forecast for the full year. Tesla news. New Tesla vehicle registrations dropping 39% last month in Germany. Also plunged 56% through the first 8 months of the year. This according to the Federal Motor Transport Authority data that we got today in Europe. Tesla also posted steep August declines in France, Belgium, Denmark, and Sweden. Worldwide vehicle deliveries falling 13% the first half of this year. So that puts the company on course for its second consecutive annual decline. The S&P right now up 31 points, 64.46 on the index. That's up about 0.5%. The Dow down 108 points, and the Nasdaq 100, 218 points higher. That is up just about 0.9%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney live here on Bloomberg Interactive Brokers Studio. We're streaming live on the YouTube internet thing, so head over there and search Bloomberg Radio. So in Bloomberg News, Scarlett, I think if you get a B, a green B next to your story, that means it's like an exclusive or breaking news,
Yeah,
right?
you had a scoop.
Okay. So that's a good thing, right?
That is a very good thing, absolutely. Reporters want this.
You know who gets a lot of those green B things?
He's walking into the studio right now.
This dude, Mark Gurman. And it's usually about like tech stuff, Apple in particular stuff. And he's got another one today. I don't know. Apple's lead artificial intelligence researcher for robotics has departed the company to join Meta Platforms. I feel like I've read this kind of piece from Mark almost on a weekly basis over.
You mean Apple losing on AI?
Yeah, I mean, people kind of walking out the door. At some point, it's got to be a problem, even for the Apples of the world. Mark Gurman joins us. He's a managing editor for global consumer technology at Bloomberg News. He's usually out there in LA, but something's going on there because Mark Gurman's here in New York. Who was the other dude we had on? The entertainment dude.
Lucas Shaw.
Lucas Shaw. He's in New York, so I don't know what's going on out there in LA. Maybe they're cleaning the offices or something, painting the offices.
No, we both have colleagues here.
All right. Mark, talk to us about Apple. Is it a problem that they're losing some of their AI folks, the robotics folks, that kind of thing? You don't typically see that too often.
It's only a problem if it impacts the consumer. And right now, Apple's AI efforts are impacting the consumer because Apple Intelligence and Siri lag very much in comparison to competing products on other platforms. Now, this can all be turned around, right? You've got the ability for Apple to do partnerships. I predict there'll be some sort of big AI partnership for Apple. I've reported that they're in talks with Google on an AI partnership. I've reported they've been in talks with Anthropic and OpenAI on potential AI partnerships. They get one of those done, it's a different ballgame. They buy a company. I first reported over the summer that they've talked to Mistral, reported that they talked to Perplexity. I don't expect either of those deals to get done, but that certainly shows you where their head's at, okay? If this all gets turned around with a major new version of Siri next year, if they get the Apple Intelligence pipeline heading in the right direction, if they buy and hire the right LLM people, they could be in pretty good shape. Don't forget, Apple has the best ecosystem, they have the best hardware, and they're able to deploy new features and operating system upgrades faster than any other company. And so at the end of the day, this is still their game to lose because there are so many levers they can pull, especially with their cash balance, to turn this thing around.
So why haven't they done any of those things so far? Why are they waiting? What's the holdup?
Well, Apple, unfortunately for them, they're very tied to a couple cycles, right? They have their spring cycle, and then they have their fall cycle. The fall cycle has been set for some time. There's really no changing that. That's locked and loaded. You'll see the introduction of those products and those software features next Tuesday at the iPhone 17 launch event. The spring is really the next opportunity for there to be major new features, right? That's when they're going to roll out a pretty big update to iOS 26 called iOS 26.4. At that time, I expect them to release an overhauled version of Siri that are going to fix a lot of these issues.
That's a long time from now, though.
It is a long time. Yeah, it is a long time. And the truth of the matter is that the AI space runs far more quickly than even the mobile space. You saw a lot of innovation in the smartphone space over the last 2 decades. AI is moving 10 times as fast as that.
And they're aware of that. They're smart people. I guess they've made the decision that they're comfortable with their timing. Did they run the risk of making a fundamental error in their judgment of that timing?
I don't think they're comfortable with the timing. I think that the timing was actually even further out. I wasn't expecting a major new version of Siri with incredible enhancements for consumers, probably not until the end of 26 or sometime even at the tail end of 2027. So this is going to be happening at least 6 to 12 months sooner than Apple had originally planned. They are probably 1 or 2 years away, if they did nothing, of starting to bleed share to competing smartphones with major AI features. Right now, to tell you the truth, we talk about AI all day, every day. It's very important to the market. It's very important for the current technology age. Nobody's buying phones because of AI or not because of AI. But we are moving towards that, and that is going to happen. It's 1 or 2 years away. And so if they're not in good shape by then, they're going to start being impacted, not only in terms of what we talk about, not only on Wall Street in the stock market, but in actual purchasing decisions by consumers. Because right now, consumers only care about a few things when they buy new phones. They want to fix their broken screen.
Yep.
They want a better camera.
And they don't want to pay too much for it either. That's the other thing. I mean, well, incorporating all these AI gee whiz factors bring up the price to $1,500 for, you know, your standard phone. That's something that consumers may not stand for.
Well, to your point, it's a very good point. You may see AI cost drivers increase because in many cases it requires, especially on Apple's side, improved chips, more processing power, improved battery life, improved cameras to take advantage of these things. So you may see the core technologies in these devices actually go up in price in order to enable these next set of AI features. Because unlike Google and OpenAI, Apple's less reliant on the cloud. It's really a hybrid model. So to your point, the core hardware is very important here too.
The Google legal announcement here, the ruling,
추가 매도하도록
obviously very positive
하겠습니다.
for Google,
추가
also
매도
positive for Apple
사인드리도록
stocks.
하겠습니다.
Yeah, it's a big deal for Apple. And some people have said there's a big deal for Apple.
그러니까 45.13입니다. 45.13.
Google had
추가 매도 사인드렸습니다.
hundreds of billions of dollars at stake here. They could have lost their ability to strike search agreements at all, default search agreements. They're basically giving up some data and pretty much nothing else. So massive win for Google, big win for Apple, gigantic win for the technology industry.
That's
Because
what I was
you,
going to ask you. Is that
yeah, you
set
have
a
precedent here is set now. So, you know, Meta is probably in better shape than they would have been otherwise. You know, Apple has this DOJ trial too. You know, that Google just had its moment. Apple's going to have its moment in a couple of years. And this sets a lot of the precedent for that. So at this point, it's anyone's guess, but I would assume that Apple's going to get off scot-free also.
I mean, again, in Silicon Valley, I got to think that this feels like a little bit of a reset on the regulatory front, which was front and center.
A little bit of a reset.
Yep.
You know, the European Union is still, you know, going fast and furious. But if you're a technology consumer, this is amazing news. If you work at a technology company, if you invest in a technology company, if you're into technology, this is great news. These companies are going to be able to innovate at the pace that they want to, and, you know, move fast and break things, I guess.
Yeah, that's worked well in the past. Mark Gurman, thank you so much for joining us here. Mark Gurman, he's managing editor for global consumer technology for Bloomberg News, joining us live here in our Bloomberg Interactive Brokers studio. So we got that. That is very cool. Plus, Lucas Shaw's in town, too. So, boy, double whammy here. Red headline crossing the Bloomberg terminal. Trump plans to block wind farm off of coast of Massachusetts. Man, if you're an offshore wind person, not good.
I know. You've already seen the Rhode Island project
Yep.
be stopped in its tracks. Now this one in Massachusetts.
Yeah. So, I don't know. But, boy, when I was in Ireland last year, wind farms everywhere. I mean, the wind towers are everywhere.
And they'll continue to be everywhere, except in the U.S.
Yeah, except in offshore. They're all over Texas for what it's worth. This is cool.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, it is 10:53 a.m. on Wall Street, and we are taking a look at the stocks that are on the move. And one of them is Macy's on earnings. The stock up almost 20%, $16.10 right now. And this is after the department store chain lifted its outlook, but did take care to point out that the consumer is still feeling pretty cautious. So for more, let's bring in Emily Cohn. Emily is Bloomberg's consumer team leader, also a Big Red alum, graduated from Cornell University and was an editor at the Cornell Daily Sun, to discuss Macy's latest results. So it sounds like a good news, bad news kind of story, but investors are taking the good news here.
Thanks, Scarlett. Yeah, maybe I would say cautiously optimistic.
That's a favorite term of CEOs.
I think this falls in line with what we've heard from other retailers. Shoppers are still shopping. Tony Spring told us on a call earlier this morning, he used the word surgical. So they're being precise about what they're spending on, being choosy. They called out home furnishings and apparel as strong sellers, also citing high demand for fine watches, jewelry, mattresses. So they are shopping. I think the main question I have is, how long will this last?
How promotional are some of these retailers? How promotional do they have to be? Because I know that goes right to the margin.
Yeah, I mean, that's an interesting segue into Dollar Tree. I think Dollar Tree raised prices so far this year to offset the cost of tariffs, and shoppers felt that, and that that has a limit. There's only so far you can raise prices, and I think that is starting to eat away at their bottom line. They can't really raise prices that much anymore. I think these retailers are in a difficult spot. They want to keep prices low because of how the consumer is feeling, but also their costs are up on account of tariffs.
I would imagine Dollar Tree has a lot less cushion, as you say, to raise prices given who they're targeting and given how they're seeing a lot of higher end consumers trade down to Dollar Tree than a Macy's. Macy's did say explicitly that price increases are on the way, didn't they?
Yes, they said that they have already started and that they're coming, but their sales are strong. And I think, you know, they're in the midst of a turnaround. There were signs that Tony Spring's strategy is taking hold. Comp sales rose more at his reimagined stores than they did overall. So I think that's a good reason behind the stock jump this morning.
What's different about a quote unquote reimagined
Good
store?
question.
I think that is a really good question. I think these are the stores where they believe that they can have the greatest edge. So they're doing a lot to reinvigorate sales. They're redesigning the stores. They're rethinking their assortment. And these are the stores that they say we should really watch. This is the future of Macy's.
And Tony Spring is also a Cornell guy.
Ah, there you go.
It's
a big red gathering here.
I didn't even know that.
Let's put this into context. What we heard from Macy's, what we heard from Dollar Tree, and of course, Dollar General earlier in the month, or was it this month or last week? Yep. In any case, what are we hearing from retailers overall? Because investors are punishing some and rewarding others, even though the message, I would say, is fairly consistent that consumers are spending. They're just being really, really wary and careful.
I think you nailed it. I think retailers continue to point to strong sales momentum. People are shopping, even in the face of tariffs and threats of inflation. I think the question I have is, knowing that retailers stock up months ahead of time, they had their inventory that they sold through now months ago, perhaps even before tariffs. I don't think we've really seen the full paths through of the costs of tariffs yet. And I think we'll continue to see that in the coming months, and especially during the all-important holiday shopping season.
Let's go there. Is there a consensus building to how the holiday season may shape up?
It's still early. I think the outlook isn't great so far. Although Tony Spring did say that the back-to-school shopping season he used the word good, and he said that back-to-school is generally a good bellwether for the holiday shopping season. So there was a slight note of optimism there, but not totally bullish.
Emily, you cover the consumer team. You're the team leader for this group. Which company is most interesting, is most exciting right now? Like, who is leading the way in terms of being innovative and coming up with novel solutions to the persistent challenges that this industry faces?
Yeah, for sure. I mean, I think the discount retailers are really the ones to watch right now. So I'm really interested in TJ Maxx, Marshalls. These are the companies that people really look to for deals. They have an interesting buying model where they're buying like the extra inventory that other retailers didn't sell. So they're a little bit isolated from the tariffs, and they also are benefiting from the fact that a lot of retailers bought a lot of stuff ahead of tariffs. I'm also really interested in the dollar stores. Dollar stores, you know, have a huge footprint. They're in these rural parts of the country that traditionally the big retailers don't reach. That has given them a big advantage. Now Amazon and Walmart are coming for those dollars from e-commerce in a really big way. So I'm really interested in how these value retailers.
Do any of those companies have a large online presence?
No, well, they are doing things like partnering with Uber Eats and delivery services like that. But I think the main draw is like if you're living in a rural part of the country, like the place that you go to buy a gallon of milk at the end of the day is your Dollar General. Like that's the store that you have. But increasingly, Walmart and Amazon are looking to these rural areas as their last frontier.
All right, Emily, great stuff. Emily Cohn, consumer team leader for Bloomberg News. Appreciate getting that update on Macy's and some of the dollar stores here as these retailers continue to report. All right, for our listeners in the U.S., reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence Radio starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news.
자, 현재 실시간 대응 중에 있습니다. 좀 더 지켜보고
Are people just too exuberant out there?
사인드리도록 하겠습니다.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, folks, we got a lot coming on in this next hour. We're going to talk to Michael McKee, Bloomberg International Economics and Policy Correspondent. Jennifer Reed, Bloomberg Intelligence Senior Litigation Analyst. She's going to break down this Google deal. They dodged Chrome sale in the antitrust case. I think it was a pretty good win for Google and for other tech companies here from the courts here. Around 11:20, President Trump is going to participate in a bilateral meeting with the President of the Republic of Poland. We will carry this event live when it starts. It's scheduled for 11:20. No idea, but we'll carry it anyway. James Abate, Managing Director and Head of Fundamental Strategies at Horizon Investments. He's going to give us his latest call. And then we were just talking about some of the dollar stores. We're going to check in with Jennifer Bartash. She covers all the retailers, and we'll break down what's happening at the dollar stores. So a lot coming up in this hour. Scarlett Fu and Paul Sweeney with you. Right now, let's go to Lisa Mateo. She strolls in for Bloomberg Business Flash, Lisa.
You got it. We have stocks kind of rebounding this after days of losses. Alphabet giving tech a good boost. This is after that judge ruled Google can retain control of Chrome and its partnership with Apple, but has to share some search data with its rivals. So we have shares of Google or Alphabet up about 8%. Then we have shares of Apple. They're up about 3%. The sell-off in government debt lost some momentum. The yield on 30-year treasuries came close to 5% before erasing that advance. Let's see the 30-year yield. Not 4.91%. That's down 4 basis points. We go to the 10-year, 4.23%. That's down about 3 basis points. And the 2-year, 3.61%. That's down about 2 basis points. The Bloomberg Dollar Spot Index down about 0.1%. Checking in with other currencies, we have the Japanese yen up about 0.1%. We have the euro up about 0.2%. More earnings. Macy's, which also owns Bloomingdale's and Bluemercury, it raised its annual outlook, reported its best comparable sales growth in 3 years. Its CEO said the company's back-to-school season is off to a good start. Their shares are up about 18%. Shares of Dollar Tree, though, they're lower. They're down 7%. The discount chain said profit for the current quarter, it would be little change, and that kind of overshadowed the news that the company boosted its annual outlook. And it's a profit beat for Campbell's. Their shares up about 4.5%. That was thanks to its snack units cookie sales, particularly those Milano white chocolate lineup. So those shares are a little bit higher this morning. After the close, we move on to Hewlett-Packard Enterprise, Salesforce, and American Eagle Outfitters. For on-demand news 24 hours a day, you can subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Scott.
All right, Lisa Mateo, thank you so much. We appreciate that. We were just hearing how we got the markets kind of up and down, red and green out there. I don't know what to make of it, but
a lot of green on the NASDAQ thanks to that ruling for Google, which was a lot better than a lot of people expected.
Yeah, I think you're right. And as Mark Gurman suggested, it's good for the tech sector in general, and suggesting that maybe this administration, these courts in particular, may take a little bit more of a softer tone for some of these technology companies as they kind of digest or try to deal with some of these concerns about monopoly in some of their businesses here. All right, let's take a look at what are some of the stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu. We're joined by Bloomberg's Christine Aquino. Christine, what are you looking at today?
I'm looking at beer, Paul. Which is a little early.
Boom.
I was just going to say, but
a little early, but we got to
always
talk
5
about
p.m.
it.
somewhere.
Exactly. We got to talk about it, though. It's Constellation Brands, the ticker STZ, and that stock has just been extending declines all morning. It's now down more than 2% after starting the day a little on the back foot, but it's a lot more on the back foot. And that's because it's a day after they reported a cut to its fiscal guidance in 2026 because of weak consumer demand. And of course, we have a number of banks and brokerages giving it a downgrade. Price target was cut to $158 from $182 previously at Deutsche Bank. BNP Paribas Exane is cutting it to underperform, and it's also getting price target cuts 209 from 239 previously at another shop. So yeah, a lot of price target cuts for this stock. Now, President and CEO Bill Newlands yesterday speaking about this poor outlook and saying that it is primarily because of a notable decline in purchases of high-end beer among Hispanic consumers. So as we know, Constellation Brands, of course, owns Modelo and Corona, so that's really hurt their business.
All right, so we're keeping an eye on that one. Lululemon will be reporting earnings, I believe, tomorrow after the market close, right? But the company really is finding itself not in the moment because leggings are only for boomers, according to a recent Wall Street Journal article. Everyone else wears loose pants.
Yeah, we've moved on from leggings as a society. But yeah, that's absolutely right, Scarlett. And so, yeah, we'll get more thoughts, obviously, from the company on their recent poor performance. But yeah, Lululemon, ticker LULU, shares at the moment down 0.1%. So ahead of those earnings, of course, we're just we got an interview with their chief marketing officer, just taking a look at their big marketing shift. So really the strategy appears to be now emulating the success of Nike, right? Like trying to tap endorsements from sports stars. So they've got American tennis star, of course, Frances Tiafoe, who wore Lululemon apparel at the US Open. Paul, you probably saw that. They also signed Formula One champion Lewis Hamilton, and this is because their stock has fallen 50% this year, so they got to do something, right? And of course, their CEO Calvin McDonald still targeting $12.5 billion in sales by the end of 2026. So that's a lofty goal, and a lot of analysts are predicting that they will fall $500 million short of that goal. And so they're trying to mix it up, do something new. So we'll probably hear more about that when they report.
And Tesla,
ticker TSLA. Of course, that's back in the news after we heard from CEO Elon Musk earlier in the week talking about his new grand plan. Shares are up 3.8% this morning, and that comes even after we got the latest data from its Europe sales. So that's data from the Federal Motor Transport Authority saying that its sales slump across almost all of Europe's biggest electric vehicle markets just continues. So apparently in Germany, new Tesla vehicle registrations dropped 39% last month, plunged 56% through the first 8 months of the year. There's also seeing steep declines for August in France, Belgium, Denmark, Sweden, a lot of big EV markets just really not going for Tesla. The one exception, of course, is Norway, where it did rise. So very interesting, though, because it seems like investors are not focusing on that. They're focusing on comments from Elon Musk earlier this week saying that, well, essentially he was trying to take focus away from their poor car sales and talking about their Optimus promise instead.
Yes, bad numbers out of Germany for sure. Christina Aquino, thank you so much, managing editor for Markets Live over there at Bloomberg News. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Boy, a red headline crossing the tape kind of threw me for a little bit here. ConocoPhillips says it will reduce workforce by 20 to 25%. And they're saying most of that's going to be done by year-end 2025.
They have 11,700 employees.
자, 청산 사인 드리도록 하겠습니다. 자, 본절가 청산 사인 드립니다. 자, 약수익권 청산입니다.
They received an email
청산
of
사인
employees
드립니다.
on Wednesday morning containing a video message from the CEO Ryan Lance. This is according to Reuters, and the company is set to hold a town hall meeting on Thursday, I guess, with more details.
Kind of wish we had a.
근데 PC 오류로 캡처가 늦어져서.
Well, we'll need to get to work on that.
Yeah, exactly.
수익권 캡처 후에 말씀드리도록 하겠습니다. 자, 수익 청산 사인 드렸습니다.
And energy.
Yeah, you want to add
everybody's energy these days.
Something, let me know.
That's 2,900 jobs, by the way.
That is, I didn't see that coming. I didn't.
It's interesting.
Energy industry is under severe pressure. They kind of weathered the peak oil discussion.
To hijack the interview here in kind of this
약수익권
direction.
10개 학기 중에서 40만 원의 수익 청산 사인 드렸고요.
The Wall Street Journal had a story about how the margins we've seen in the second quarter earnings reports have been padded by companies trying to cut expenses, including employees. And then today, Raphael Bostic, the Atlanta Fed president, said he's still hearing from companies that are prepared to let people go because they're afraid of the impacts of the fiscal policies out there right now. And there's this overhang of, could we go into recession? And then on top of that, you don't know what's going to happen now because the court has ruled that the Trump tariffs are illegal. Trump may try other types of tariffs, so that's just going to drag things out. So if you're a forward-looking company and your outlook is you're not going to make a lot of money because the economy is slowing down, then that's what you're going to do to
you control what you can control, right?
You control what you can control. And then we had this report today that OPEC is considering another production increase, which would drive the price down. And when you're at $63, Bloomberg New Energy Finance said that's barely the marginal cost to produce new oil. So nobody's drilling. Nobody's really expanding, and the economy is slowing. So it's
a lot of treading water, right?
It's a lot of treading water, and it's maybe a surprising announcement from ConocoPhillips, but not surprising at the same time.
Boy, interesting. And a lot of folks are saying, are we going to see more of this going forward here? So on the margin, I can't imagine the Trump administration is going to be happy with a big U.S. Houston-based energy company.
Especially not when they've made carbon energy such a centerpiece of his agenda.
Hey, Mike, just real quickly, what's the latest on the Fed here? I mean, boy, they're under pressure. What's the latest reporting there with our Federal Reserve and the various members of the Fed?
Well, we did have, besides Raphael Bostic,
자, 금일 트레이딩 여기서 마무리하도록 하겠습니다. 자, 금일 약 60만 원의 수익권 형성하였고요. 트레이딩은 여기서 마무리하도록 하겠습니다. 자, 긴 대응간 다들 수고 많으셨습니다.
He isn't ready to say which one is going to be dominant, so he isn't saying we should cut rates. But he did sound maybe a little bit more willing to consider that if we see maybe a bad report on
주문
Friday
청산이
and
완료되었습니다.
a high inflation report on next week on the 11th, he might change his mind and go the other way, no cuts. So he's out there, and then Chris Waller was on CNBC today saying essentially what he has been saying, that we should cut rates now, and the economy is slowing, we should get closer to neutral, so we should have a series of rate cuts. That's the policy side. The legal side is that we are still waiting for a decision on what happens with Lisa Cook. The judge extended the deadline for the two sides to file briefs with her until tomorrow. The Cook side already has in it, they said she never committed mortgage fraud, but they don't offer any evidence one way or another. I guess they're trying to
자, 그리고 보이스룸 종료 전 나와 있는 기사 몇 가지 말씀드리고
the Congress always intended for the Fed to be independent and
종료하도록
that they
하겠습니다.
always intended that for cause be
자, 11시에
for
보스틱 총재 애틀란트 연은의
incompetence or,
연준의
not showing up
보스틱
for the
총재가
job or
올해 한 차례 금리 인하가 여전히 적절하다 라고 말한 바가 있고요. 그리고 7월 졸트 구인 이직 건수는 720만 건으로 예상치를 하회한 것으로 확인이 되고 있습니다. 자, 채용과 이직 건수도 530만 건으로 전월과 비슷한 수준을 유지하고 있다고 확인이 되고 있고요. 자발적 퇴직은 320만 건으로 전월과 변동이 없었음을
And whatever she says isn't going to matter because it's going straight to an appeals court.
Yeah.
So they're going to want to have
보여주는
time to get
데이터가
all this through
나왔습니다.
to see if she shows up to vote.
Michael McKee, thank you so much. We appreciate it. Michael
자,
McKee,
그리고
International
트럼프
Economics
대통령이
Technology
최근 미국
Correspondent for
빅테크
Bloomberg
기업들을
News.
규제하는 국가에 대한 상당한 관세를 부과하겠다고 위협한 것은 유럽이 아닌 한국을 주된 표적으로 한 것이라고 밝힌 바가 있고요. 이 위협은 한국에서 발의된 여러 기술 규제 법안에 대한 백악관의 우려가 커진 가운데 나왔으며 최근 한미 정상회담에서 한국이 디지털 규제 포기 서약서 서명을 거부한 직후에 이루어졌다고 합니다. 자, 그리고 연준이 오는 10월 21일 결제 혁신을 주제로 한 컨퍼런스를 개최할 예정이라고 합니다.
Some search syndication, meaning a search engine can basically provide results that just come straight from
자,
Google,
여기서
right? They're mimicking Google.
금일
The surprising thing, though,
라이브
here, and what was great for Apple, is
트레이딩은
that the judge
종료하도록
said
하겠습니다.
Google could continue to pay for search default positions. That's with Apple, with Mozilla. It pays some OEMs to pre-install Google Search on the Android phones that they manufacture, and that I think was a really big surprise.
How is this remedy consistent with the original ruling, with the original finding of the court?
You know, I actually have a really big problem